Founder and CEO of Prodigy, which provides software to facilitate online car sales for dealerships. Micaiah, thanks so much for joining us. I'm firstly fascinated to what extent people are willing to buy such a big ticket item like a car without having test driven it or seen it in person.
Yep, great question. So what we actually see is that, a lot of sales that are happening online now is for new cars. And if you're buying a new Toyota, a new Honda, there's not a lot of variation dealer to dealer. And so what consumers are really gravitating towards is convenience. And being able to do that online in many states is the only way to get a car now. So like you mentioned, with the gig economy down, car sharing down, ownership is really important as a needed transportation. And online sales in many states is the only way to do that.
And talk us through exactly how your service, your software, your app helps make this possible. It's not so much a challenge to existing dealerships as opposed to helping existing dealers.
Absolutely. And so we work with existing dealerships. What we provide is the technology that enables online car sales. And so if you're on a dealership's website that's using our platform, you can basically do all the different things that you would do in store, only online. You can see payment options. You can apply for a loan. You can get trade-in value. You can even go on virtual test drives. So just like you and I are doing a live video chat, you can do that with a dealership. They can give you a tour of the interior of the car, really show you how it works, get you comfortable, and then they offer contactless delivery, or you can pick it up at the dealership.
I mean, I still wouldn't be enough for me. I'd want to see it physically, but enough people are doing that. What level of sales are we seeing? Picking up on your app, and what does that mean to the total?
So the overall car sales total low was actually 4 weeks ago. And since then, we've seen overall car sales increase by 148%. But what's really driving that is online sales. It's up 152% in the last 4 weeks. And the 4 weeks before that was up another 100%. And so these car sales that are happening and these lifts are really being driven by consumers switching to online. And I think that's a really important thing because in a post-COVID world, retailers will need to shift and adapt to the way that they handle consumers and deliver value. And so I believe this is not just something that's here for COVID, but here to stay afterwards. It's a new way for consumers to buy cars.
How attractive is pricing right now? Not so much the headline price for the cars, although that might have come down a bit, but the financing options, have they come down a lot with interest rates? Absolutely. Financing options from OEMs are the best they have ever been right now. And so you're seeing a lot of OEMs, 0 payments for 6 months, 0% up to 84 months. If you're in the market for a car, now is one of the best times ever to buy a car because the incentives are so great. And what about second-hand car sales? People's balance sheets are a little pressured. Are they shifting to that market or not?
We're still seeing strong used car sales. It's about 40% of the overall sales that we're seeing from the market. And so online car sales are not really being distinguished too much between new and used. Both are picking up drastically as stimulus checks go out and as people are actually feeling a little more stable, I'd say, in the economy from, like I said, 4 weeks ago.
Micaiah Rawson, thanks so much for joining us. So to come on Power Lunch, the cheering has stopped on college campuses with all sports cancelled. Will they be able to resume in the fall? We'll hear from the commissioner of the Big Ten on what needs to happen before he can kick off the college football season. Plus, the CEO of Papa John's on how his company is dealing with the challenges and opportunities presented by the crisis. Power Lunch with Melissa and Tyler will begin just after this show. And I'll see you coming up on Closing Bell, 3 p.m.
Get the latest breaking news alerts and listening suggestions for new stations and podcasts. Let TuneIn keep you in the loop with push notifications. Just go to your device's settings and allow push notifications from TuneIn to get live alerts and recommendations on the audio you want to know about. In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. With the NHL season temporarily on ice, now is a good time to catch up on past games.
This shot's going back in again. Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunningham to Fiala. He scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening. While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back at the wall. It's gone!
Search Classic Game Replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with it over to Reese for one, back to Hodges. It gets away from him. Barras trying to go to second. Hodges.
It's on demand, it's free, and it's only on TuneIn.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen to favorite ESPN shows on demand? Get the latest takes from Stephen A. Smith,
dynamic duos all over the place,
Dan Lebatard, and Golic and Wingo when it fits your schedule. And listen to episodes of Pardon the Interruption.
Pardon the interruption, I'm Israel Gutierrez, and I love hosting the show with my humble...
Around the Horn and Highly Questionable as podcasts anytime you want. Search ESPN to see all the podcasts on TuneIn.
And welcome back, everybody, and welcome back to the Kitchen for Power Lunch. Our breaking news coverage of the markets continues right now. I'm Tyler Matheson, and we have a special guest we'll welcome back to us in just a moment. Take a look at the markets, folks. A volatile day of trading, the Dow giving up its early gains, but the NASDAQ is up 1% as technology leads the way. It has been that way for some time. That is after the ADP employment report showed that more than 20 million jobs were lost in this country during the month of April. And more earnings pain, Disney and General Motors both taking billion-dollar hits because of the coronavirus. But first, in the first quarter, but Wall Street is shaking off the bad news, and we will explain why this hour. And the Paycheck Protection Program facing more scrutiny over fraudulent or questionable loans. We'll talk to the CEO of one bank, Washington Federal, which has processed by now more than 5,000 loans for small businesses. But first, look who's here. I am so glad you're back, Melissa. Good to see you.
I only wish we could be in the same proverbial kitchen physically someday, Tyler. It's going to happen. It's going to happen. It is great to see you. Great to be here on Power Lunch. Speaking of earnings, more than 35% of S&P 500 companies has withdrawn guidance because of the impact from coronavirus, leaving investors to fend for themselves in this market. Let's get to Bob Pisani for more on this. Bob.
Yeah, that's about 170 companies, Melissa. First, let me just show you where we are in the markets, because for the second day in a row, we've had a nice rally at the open that's faded as we go into the close. This is part of that sort of fading on the optimism of the reopening story here. So banks have been weaker, retailers generally have been weaker, but still up fractionally because the big five, the mega cap tech stocks, are on the upside. There you see banks, energy, industrials, materials, tech outperforming today. We were talking about guidance, and once again, a number of the companies today pulled their guidance. Papa John's, Mattel, Office Depot, Genuine Parts Company, Equity Residential, Waste Management. They join 170 other companies. That is 1/3 of the S&P 500 that has declined to give guidance. And this is one of the reasons we're seeing so much stock volatility. How do you figure out what the right prices, what the right multiples are when you don't have any idea what the earnings situation is going to be like? We also have problems with dividends. Many companies are cutting their dividends as well, or even eliminating them altogether. Morgan Stanley put together a list this morning, a long list of companies that might have not yet, but might in the future. And a lot of them are, of course, top heavy in the energy group like Valero, Marathon, Halliburton, but also some industrials like Caterpillar and Deere. Finally, we haven't gotten a lot of guidance commentary, but here's my favorite one of the day here from Planet Fitness. They were talking about maybe the chances of cheaper rent out there. All their locations are closed essentially, but they're seeking to double their base of locations to about 4,000 from about 2,000. Why? Well, they're saying the pandemic is going to give them a lot of leverage in negotiating lower leases with landlords. That's a little bit of good news if you're in that particular business, expanding by getting rent cuts. We'll see if that happens. Guys, back to you.
Glass half full. Thank you, Bob Pisani. So as an investor, how are you supposed to make decisions on what to buy and sell in a world without guidance? For more, let's bring in Eric Marshall, portfolio manager for Hodges Funds, and Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets. Guys, great to have you both. Lori, I will start with you. Your year-end S&P 500 price target is somewhere below where we are currently. 2750 is your price target. How do you even come up with a number when, as Bob said, so many companies are pulling guidance? And How can you come up with a multiple?
Sure. So we run scenarios is really the bottom line here. And only one of the 7 scenarios we ran when we set that price target was based on earnings. And there we put in our guesstimate for where this year's earnings were going to be, an average PE multiple. But other things we looked at included what is your typical move when you're in a recession in the stock market, when you see that first real year of pain. So we really looked at the historical playbook and frankly tried to look at as many non-earnings related metrics as we could.
How do you think about the risks ahead, Lori, and whether or not we understand them all? I mean, in a world without guidance to sort of continue this theme, is government data going to tell the full picture? For instance, we got the stupendously terrible ADP number this morning. We're moderately higher, and yet maybe job cuts aren't the whole story. There are a lot of people being asked to forfeit some pay, too, or bonuses, et cetera, which will obviously crimp consumer spending.
I think that's a great point. And I think when the data is murky, when it's tough to model, you have to rely on logic and you have to rely on common sense. When we look at the economic data, I think the market is assuming that some of these indicators are seeing their worst point in time and that while things will stay bad for a while, the rate of change will improve. And that's all well and good. And that, that's often a catalyst to get markets higher. But I do think you have to consider some of what I call the lasting wounds and scars that are going to hit the consumer, that are going to hit corporate America from this crisis. I think you make a great point on potential pay cuts and how that might affect consumer spending. When we think about what all this means going forward, we think the market has been legitimate to sort of price in some initial signs of recovery. It hasn't been illogical, but it might end up being wrong. We're just going to have to watch the data, see if that rate of change does improve. But I'll tell you, in general, my view is that as we sort of see the secondary impacts of this crisis and the third order impacts of this crisis, I think investors are going to be shocked at what some of the fallout is. I think bottom line, we are setting up for choppy markets for quite some time. So we still feel very, very comfortable with our 2750 number.
Eric, how are you thinking about your world, the world of small caps, and that small caps tend to be more domestically focused, and they have underperformed the broader markets year to date?
Yeah, I think also, small caps also tend to be a little more economically sensitive. And right now, we're flying at zero visibility for a lot of companies when we don't have earnings guidance and we don't really know what the short term is going to look like. So I think this is the time that you really have to focus on balance sheets and how adaptive is the business model and look out beyond just the next quarter or so in order to really value companies.
I mean, you got to look beyond the next quarter because we're not getting guidance at this point. Once again, Eric, one of your picks is Kulik and Safa. And in the world of semis, semis have really been blazing higher, helping tech turn positive for the year. And yet this is a stock that has underperformed its peers in the semiconductor index. So what do you see in this particular name?
Well, this is one that we think is kind of underneath the radar. They provide capital equipment to semiconductor companies. They have a lot of cash. They have a great balance sheet. And we think that there's some underlying secular trends that are going to allow them to gain market share over the next few years. So we like the stock at today's valuation based on what we see over the next 2 years with or without the virus.
All right. We're going to leave it there, guys. Thanks so much for joining us, Eric Marshall and Lori Calvasina.
All right, Melissa, shares of General Motors higher today after that company managed to squeeze out, and I do mean squeeze out a little profit in the first quarter, but the stock is still down nearly 50% from its 52-week high. Phil LeBeau joins us with more on all of that. Hi, Phil.
Hi, Tyler. Despite that small profit in the first quarter, make no mistake, COVID-19 has had a huge impact on General Motors and certainly did in the first quarter. How much did it cost the company? $1.4 billion. Remember, the plants were shut down in China for a time being in the first quarter. And here in the U.S., they've been out of service since mid-March, I should say. So the company's focus right now, it's all about liquidity, starting with the $33.4 billion they have on cash in hand right now. Here's CEO Mary Barra.
We will continue to focus on conserving cash and preserving our liquidity without sacrificing investments in key product programs and technology that will lead us into the future.
And the focus as they restart those plans, which are expected to get back up and running by May 18th or starting on May 18th, it'll be a gradual ramp up, but they want to restock the full-size pickup inventory. There have been dealers around the country who have had double-digit sales. despite coronavirus. Double-digit sales increases, and they can't get enough of these. They need to restock their pickup truck supplies. Having said that, Tyler, keep in mind that as you take a look at shares of General Motors, they do not expect much from the second quarter. They know that sales will be slowing down. They have, again, not had production since mid-March. That knocks almost 500,000 vehicles out of production. Remember, they get paid when they come off the line because that's when the dealers buy them. They don't get paid when you and I go to the dealership.
So let me ask you this, Phil. You said that they're reopening their production. I believe you said the 18th of May. Does that mean
that's the plan right now?
All facilities, that all of their manufacturing facilities will be up and running or moving towards that on the 18th of May? All of them?
That is what they are targeting. Now, there's a huge grain of salt here. First of all, it depends on whether or not the local conditions permit that. Let's say there is a plant in a particular area, there's been a flare-up, and the local authorities say, look, we really don't think this is the right thing to do. General Motors is not going to say, well, we're opening it up nonetheless. Also, Tyler, they're going to be doing this one shift at a time. They want to make sure that, A, they can get up and safely operate, that they're not endangering any of the employees there, and B, that they can operate as they should be operating. You just can't flip a switch and say, okay, all three shifts come back in to the plant. You've got to make a number of changes, which they are making in those plants. So it'll be a far different environment. So on May 18th, it would likely be a gradual reintroduction of production here in North America.
Got it. Phil, thank you very much. Phil LeBeau reporting on General Motors. Melissa.
All right, Tyler, coming up, a mixed bag for the market as tech outperforms and energy stocks are under pressure after oil reversed lower. Utilities and financials also a drag. We'll have much more on that later this hour. Plus, the Small Business Administration handing out loans for round 2 of the Paycheck Protection Program. We'll talk to the CEO of Washington Federal, which has processed about $750 million worth of loans, about what he is hearing from companies. More on Power Lunch right after this.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get the latest breaking news alerts and listening suggestions for new stations and podcasts. Let TuneIn keep you in the loop with push notifications. Just go to your device's settings and allow push notifications from TuneIn to get live alerts and recommendations on the audio you want to know about.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip 3, have a game night. In fact, why not make it a game day? Whether you're quarantined with kids or roommates, nothing passes the time like a game of cards, Pictionary, charades, dominoes, or Never Have I Ever. If you've got the hardware, break out the video game console and enjoy hours of guilt-free gaming. For more indoor inspiration, search Listen From Home on TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raised Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Hey, it's Jacoby here from Jalen and Jacoby, and after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show, and we will be joined by the director of the documentary series.
Welcome back to Power Lunch, everybody. Glad you could join us. Small to mid-sized banks have really stepped up to keep small businesses afloat through the Paycheck Protection Program. WaFd, a regional bank based in Seattle, says it has processed now more than 5,500 loans, with the average loan size about $140,000. With us now for more on the path forward for small business is Brent Beardall. He's the CEO and president of WaFd Bank. Brent, good to have you back. I guess when the PPP program started, it was a bit of a Wild West. People really didn't know exactly whom they were supposed to approve for these loans. Now with the second tranche of money coming through and maybe some of the rules being spelled out better, has that aspect to this program receded at all?
It has. It's receded quite a bit. I give a lot of credit to the SBA. They have worked like crazy to come up with exactly what the rules should be, and people are incredibly willing to do exactly what the SBA wants. We just needed firm guidance, and now we have it. So the processing times on these loans has literally gone from, number of days to where we're able to process loans in less than 1 day at this point if the borrower has the package ready for us.
Let's talk about those borrowers. What are you doing to ensure that the borrowers actually qualify under the program? Because one of the criticisms, of course, of some of the loans was that larger companies were manipulating the regulations one way or another to get loans when really they shouldn't have, or that they didn't qualify and were doing fraudulent things to get the loans. How are you making sure that the right people are getting the right amounts?
That's a good question. And let me first say that bank fraud is a very serious issue. And I applaud the prosecutors that are going after the bank fraud. But let me also say that this program, as you pointed out, was like the Wild West. A lot of people were trying to figure out the rules as we go, and we have a lot more rules today than when the program was rolled out 3 weeks ago. So the SBA came out and said it is first come, first serve. Banks, we want you to get the money into the hands of small businesses, and we worked like crazy to do that. And I think there are some people that ideally you look back on and you say, do they deserve the money? Probably not, but they fit within the rules that both Congress and the SBA put out. The obligation to banks was to make sure that you had the certifications from the borrowers to know that, yes, they did have a diminished business, their revenue was down, and they were worthy of these funds to keep their employees employed. And I think that's really what we need to look at is the intent of the legislation, which was to provide funds for small businesses to keep their employees employed for 8 weeks to get through this crisis so they wouldn't have to go into the lines of the unemployment administration.
Yeah, and whether those borrowers actually did not have access to other pools of capital that they could draw on, which must be something that you check out rather assiduously, I would presume. Let's talk about the bank and its operations. You made a profit in the first quarter. As I understand, you paid a dividend. I assume the dividend is secure. You've been paying dividends for, 100 plus years, right?
We haven't been paying for 100 plus years. We've been paying now for about 35 consecutive years on our cash dividend. We feel very comfortable with that. We have been very active in terms of share repurchases in the past. We've taken a pause in terms of share repurchase. None of us know exactly what the impact of COVID will be on our balance sheets. We feel very secure in terms of our underwriting and the sponsors we have behind our loans. But we need to see what the depth and the duration of this crisis is. But ultimately, I think banks are very well positioned now to be part of the solution. We have a great deal of capital. With the new accounting rules around allowance for loan loss, banks are well positioned to be able to withstand this crisis and be there to be able to deliver liquidity for our borrowers. One of the things you may have noticed on our balance sheet.
My memory failed there. Go ahead.
Oh, go ahead.
Finish your thought. I thought you were done.
Yeah,
no, I was going to say, my memory failed me there. It's 148 consecutive quarters you've paid a dividend, not 148 consecutive years. Finish your thought, Brent, and then Melissa has a question.
Yeah, one of the things that we've seen is our borrowers are looking for liquidity on their balance sheets. So what are they doing in these uncertain times? They're calling on their lines of credit to put the cash on their balance sheet to be able to know that they have the cash in the times of distress that are coming to us. So we did the same thing as a bank. We have all kinds of untapped lines of credit. So right before year end, we borrowed over $1 billion for 10 years at a very, very low fixed rate below 1% to put that liquidity on our balance sheet for our borrowers. And they have applauded that. It's one thing to say you have the strength. It's another thing to see it on the balance sheet.
Brian, I have a follow-up question on that point. In your last earnings report, you had indicated that 7.5% of loans are identified as quote-unquote high risk. How does that definition of high risk change as the pandemic deepens? And how do you view a high-risk borrower now versus some of the stress tests that you might put into place? For instance, an individual who might be borrowing might have a salary today of $100,000, be asked to take a pay cut or lose their job, and it becomes a completely different story.
Yeah, that will evolve over time as we see how this crisis evolves and how getting back to normal, what it looks like in the state of Washington, where we're headquartered. That's, of course, in 4 phases. The highest risk portfolios we have, of course, now are hospitality. And many of our hotels are just shut down in their entirety. So the key for us to getting hospitality back on its feet is to have business travelers start going again. But we're working very closely with borrowers. And I think that's one of the real positives out of this recession so far. Banks are being very communicative with their borrowers and vice versa. So we know what the issues are. And I think that's a lot of people have asked, why have community banks been so successful in getting the PPP loans out there where many of the larger banks have not? And I think it comes back to relationships. Relationships matter. You need great technology, but you also need to be able to call up a banker in times of distress and ask, what does this PPP loan program look like, and do I qualify or not?
Final question, and I need a quick answer if you don't mind, Brent. What are you doing with respect to a mortgage forbearance for borrowers who are having trouble making their monthly payments?
Yeah, we are happy to work with our borrowers. We are a portfolio lender, so if they reach out to us, we are happy to defer their payments up to 3 months to begin with, but then it can go on beyond that if they show us that they're truly experiencing distress.
Brent, thank you so much for being with us. We'll check in again soon. Brent Beardall of WaFd
Thank you very
Bank.
much.
And for the latest on small business news and advice and other resources, go to CNBC.com. Melissa?
Well, the 10-year yield hitting its highest level in a month after the Treasury unveiled a 20-year bond for the first time in decades. Let's get to Rick Santelli for more. Hey, Rick.
Hi, and welcome back, Melissa Lee. Yes, that's correct. Look at a one-week chart of 10s. You could pick out at 8:30 Eastern that refunding announcement. Boy, did it pop. It's high yield today, 74 basis points. Currently up 5 at 71. Keep 71 in mind, because as you look at an intraday of 30s, 30-year right now is up 9 at 142. Exactly double the yield on a 10-year note, and also 3-week plus high. And the 20-year bond hasn't been auctioned since the 80s, and it's really going to be wild in the 20th sector, because we're going to have on May 20th, 20 billion of 20 years for the first time since the 80s. And do keep in mind, since 10-year yields are half of 30-year yields, I think 20 years are going to be quite successful. Juice up that yield a little bit, and ultimately maybe we even get some ultra bonds with more enjoyable yields for investors, because it really is quite boring to play in the rest of the curve where the Fed's purchases have such a detrimental effect to those that would like to be called savers. Finally, the dollar index. This could be the 8th week in a row that at least one session has closed above 100. That doesn't happen very often. Guess where we're trading right now? Right around 100. Tyler, back to you.
Mr. Santelli, thank you very much. And still ahead, gold mining stocks are taking a hit today, but as stocks have rebounded from the March lows, the group as a whole is up more than 100%. We'll take a look at what is behind that particular move. Plus, as the future of sports hangs in the balance, especially for college athletes, the Big Ten Commissioner, Kevin Warren, will be here to tell us if he expects college football to kick off this fall, and if so, when and under what circumstances. Much more Power Lunch right after this.
Get the latest breaking news alerts and listening suggestions for new stations and podcasts. Let TuneIn keep you in the loop with push notifications. Just go to your device's settings and allow push notifications from TuneIn to get live alerts and recommendations on the audio you want to know about. In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search Classic Game Replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
It's TuneIn Sports on this day. On this day, 1984, Baltimore Oriole and MLB legend Cal Ripken Jr. hits for the Psycho.
And he hits this one high and deep to left. Back goes Darren Bragg to the warning track. It's gone. A two-run homer by Cal Ripken gives the Orioles a 3-1 lead. His fourth home run of the season. That's a great formula.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen to favorite ESPN shows on demand? Get the latest takes from Stephen A. Smith,
dynamic duos all over the place,
Dan LeBatard, and Garlic and Wingo when it fits your schedule. And listen to episodes of Pardon the Interruption.
Pardon the interruption, but I'm Israel Gutierrez, and I love hosting the show with my humble...
Around the Horn and Highly Questionable as podcasts anytime you want. Search ESPN to see all the podcasts on TuneIn.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip 3, have a game night. In fact, why not make it a game day? Whether you're quarantined with kids or roommates, nothing passes the time like a game of cards, Pictionary, charades, dominoes, or never have I ever credit.
Welcome back, everybody. Let's go to Sue Herrera right now for an update on the coronavirus. Sue.
Thank you so much, Ty, and good afternoon, everyone. New Jersey's Governor Phil Murphy says he is extending his state's public health emergency by another 30 days. He says it is needed to keep the state on a war footing in its fight against the pandemic. In Southern California, some beaches that had been closed because of overcrowding are reopening with new restrictions. In Laguna Beach, hours are limited to 6 through 10 a.m. Visitors can walk, run, swim, and surf, but they are not allowed to put down towels and hang out. In Maryland, nurses arriving at the Greater Baltimore Medical Center were greeted with cheers as part of National Nurses Day. People lined the streets waving pom-poms and holding signs, and drivers seeing those displays honked to show their support for the nurses. And we thank them very much for everything that they are doing during this pandemic. As always, for more on the coronavirus coverage, you can head to CNBC.com. Ty, back to you.
And Sue, I second that thought as well. Let's go to Seema Modi, who is covering us on Trading Nation today. Hi, Seema.
Tyler, hello. We're checking in on the gold miners down sharply today as some countries ease lockdown measures and economies begin to reopen. The GDX still up 16% year to date, but could the safety trade be in trouble? Mark Newton of Newton Advisors and Mark Tepper of Strategic Wealth Partners are the Trading Nation team today. Mark Tepper, let me start with you. Would you rather own gold or the gold miners?
So I think the safety trade is still in play. I do prefer GLD over the miners. GLD is your pure play, and then all the miners, the issue with them is they actually hedge the commodity. Gold does very well as a calamity hedge, and I think we would all agree that this is definitely a calamity right now. It also does well during periods of inflation, but also deflation, and there's absolutely no question about it. There has been a ton of money created over the last few weeks. And when you look at the stock market over the last few weeks, the stock market's gotten cocky. I mean, it's been brushing off bad news, and it just continues to move higher and higher. And I think we're at the point right now where stocks have gotten way ahead of themselves. So the stock market does not reflect what's happening in the economy. So I do think double-digit unemployment is going to be the norm for quite a while, unfortunately, much longer than consensus thinks. And because of that, I think the safety trade is going to be valid over the course of the next several months. It's going to be good news for GLD holders.
Mark Newton, what do you think? Will the rebound in the equity market limit gold's ability to continue to rise here?
So I like the gold miners, and actually GLD should still do well, in my opinion, also in the weeks ahead. I mean, you've seen GDX, the gold miners ETF, rose to the highest level we've seen since 2013 yesterday. So despite today's weakness, it's actually been performing quite well. Yet if you look back at when gold peaked back in 2011, we're still down about 50% off those all-time highs. So GDX, to me, represents a pretty decent momentum trade, as part of an environment where not a lot of things have been working, lately over the last couple months. So this is still something that I own and I think can make further progress in the weeks and months to come.
Got it. The two marks. Thank you for joining me today. And for more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Melissa, back to you.
Thank you, Seema. Still ahead as parts of the country start to reopen. How far are we away from the return of live sports? And will colleges be ready to play in the fall? Commissioner of the Big Ten, Kevin Warren, will join us next. Plus, shares of Papa John's hitting its highest level in nearly 3 years after the company reported a profit in the first quarter. We'll sit down with the CEO of Papa John's to discuss how the company is delivering amid the coronavirus pandemic. And remember, you can always watch or listen to us live on the go on the CNBC app. Our special breaking news coverage will be right back.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Different sectors tend to do well during different periods of the economic cycle. When the economy is expanding, industrial and technology stocks have historically outperformed the broader market. However, when the economy is contracting, more defensive sectors, such as utilities and consumer staples, tend to outperform. I'm Lee Bohl, and Schwab is the better place for traders.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get the latest breaking news alerts and listening suggestions for news stations and podcasts. Let TuneIn keep you in the loop with push notifications. Just go to your device's settings and allow push notifications from TuneIn to get live alerts and recommendations on the audio you want to know about.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search Classic Game Replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With Game Replay on TuneIn, you can listen to every power play, slapshot, and goal of the 2019-2020 season so far.
Suter to Connor to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
It's TuneIn Sports on this day. On this day, 1984, Baltimore Oriole and MLB legend Cal Ripken Jr. hits for the Psycho.
And he hits this one high and deep to left. Back goes Darren Bragg to the warning track. It's gone. A two-run homer by Cal Ripken gives the Orioles a 3-1 lead. His fourth home run of the season. That's a great formula.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn. To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration, search Listen from Home on TuneIn.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind.
Taking a check on the markets right now, the Dow and the S&P 500 virtually at the flat line. The real star, though, today is the Nasdaq. Information technology on the S&P 500, by the way, going positive for the year, now at 1% on the year. And semiconductors are really leading the charge with the SOX, the semiconductor index, up by about 2% right now. Meantime, we do have oil closing for the day. Let's get to Dom Chu at the CNBC commodity desk. Hey, Dom.
All right, so Melissa, we haven't seen red on the screen for oil prices in over a week at this stage, but we are today. This is a 5-day winning streak that has been snapped at this point, and currently U.S. benchmark West Texas Intermediate, or WTI, prices are $23.82. That's 3% down. World benchmark Brent crude just about $29.56, or 4.5% to the downside. And where anticipated demand growth has been a big driver of the recent upside action, today it's more supply side concerns dragging things lower. Earlier today, U.S. Energy Department data showed a build of 4.6 million barrels of oil inventory last week. That was smaller than the 8.7 million barrel analysts were expecting. But the pullback today comes as WTI crude has rallied by over 50% in the last week. And so, Tyler, as those oil prices come in focus, watch those energy company stocks as well. They have been a recent beneficiary of that rise in prices. Back over to you.
Dominic, thank you very much. And of course, the coronavirus pandemic has taken a huge toll on universities around the country as they think about how or even whether they will open come fall. For many college athletic departments, football, of course, the biggest revenue driver, meaning the impact of skipping the season or doing it on different terms could be devastating financially. According to a recent ESPN study, the sudden disappearance of sports because of the virus will erase at least $12 billion in revenue across the economy. And if there's no college football or NFL this fall, that number could more than double. Here to talk about the path forward for college sports is Kevin Warren. He's the commissioner of the Big Ten, the conference made up of 14 schools in 11 states, mostly, but not entirely, in the Middle West. Kevin, it is great to see you again. Welcome.
Tyler, it's so good to see you and to hear your voice. I just appreciate your coverage and everything that you've done to keep everyone up to speed as far as the financial markets and also what's going on with this COVID-19 pandemic that we're dealing with. So it's good to see you.
Well, thank you so much. Now, you just started this job less than a year ago, so if you ever give me market timing advice, I'm going the other way, because you couldn't have picked a rougher time to come in and take over a job that is complicated under the best of circumstances, but now is doubly so. How far are you away from making a decision on whether college football will proceed as normal on schedule this fall, and what different scenarios are you considering? Games without fans, whatever.
Tyler, one of the things that's important from a Big Ten standpoint is that we always want to make decisions based upon experts. And so I'm relying heavily on our medical experts. One of the things we did early in March, even before this pandemic got going in full speed, is that we formed an emerging infectious disease committee made up of 14 members from our 14 institutions in the Big Ten, led by Dr. Chris Cradaville, who's a professor and a doctor at the University of Nebraska, which is a key player in this whole medical research area. The other things that we have done is I've had daily calls with our athletic directors. I've had regular communications with all of our chancellors and presidents, and I'm just making sure that we rely on our experts in this area. I'm looking to be in a position, I would say, in the next 6 to 8 weeks to see if we have sports in the fall. But even bigger than sports in the fall is that we're collectively in the Big Ten focusing on what we need to do to have school in the fall. Because if we don't have school in the fall, then we don't have sports in the fall. And so we have a whole nother level of issues that we're focusing on. What can we do to make sure that we can return to our campuses in a safe manner where we can educate our students? And then what do we need to do to make sure we can return to practice in the fall in a safe manner? But one of the things we will always do in the Big Ten is to make sure that we put the health, safety, and wellness of our student athletes at the epicenter of all of our decisions.
Couple of quick questions here, if I might, Kevin. College football is usually the bell cow for athletic department budgets. Roughly, what % of the athletic department budget comes in the Big Ten from football revenues? And if you don't have football, does that imperil the other sports throughout the calendar year?
Well, one of the things I think, and I saw your interview earlier this week with President Mark Schlissel of the University of Michigan, and he talked about the impact that overall that it has on our campuses, universities. You're right. At most of our universities across the country, but especially in the Big Ten, football is the critical component from a revenue standpoint. But one of the things that we're working on a daily basis is to explore scenarios, all type of scenarios. How do we return to campus? When do we have a chance to play football, all other sports? And you said it even into the lead into this interview that there have been studies done to say that the impact of sports, not having sports, is a $12 billion impact. Sports overall in our country is a $100 billion industry. And we know the impact that it has not only at the professional level, at the collegiate level, but one of the things is that I am very confident, not only with our financial experts within our Big Ten Conference, but also the various individuals that run our campuses, our chancellors, our presidents, our provosts, our athletic directors, that we're working together from a collective standpoint to make sure that whatever impact sports has in the fall, whether it be a positive impact or a negative impact, that we're prepared to handle it in a very professional manner. So this is something that we're working on every single day. These are major decisions. We're trying to make the best decisions, based upon the best information, not only from our campus standpoint, but then also we have other partners, our network partners that we're collectively working on. And I'm very confident that we will make the right decisions from a Big Ten Conference standpoint and from a college athletic standpoint.
Kevin, just in terms of the impact, I mean, the impact is not just on a college sports program, but also on the entire college, and especially at a time when colleges are really grappling with when to open and whether or not students will return in the numbers that they had gone to college in the past. I would think that having a winning team is really important in terms of fundraising in general, in terms of creating that halo effect for alumni to feel good about their alma mater and open up their pocketbooks. And that goes away if there's no season played.
Yeah, Melissa, that's a great point that you've made. And I think one of the things we have found out, if there was ever any question over these last couple months, whether it's collegiate sports or professional sports, and even high school sports, is that sports plays a major role in our society, in all different industries, from a travel industry standpoint, hotel industry, restaurant industry standpoint, television industry. Sports is really important. It's something that our country has been really relies upon. We love getting together. We love supporting our teams. And so the interesting thing about this pandemic that we've been dealing with is the impact here is coming from various locations and directions. So we have financial impacts that we're having to address. We have issues, as you alluded to, Melissa, as far as our students coming back to campus in the fall, our whole education system. So again, this is a complex time in our society. It's a complex time really in the world. And I know it may shock some people when I say this, is that I really am excited to be in this position at this time, because the decisions that we will make will dictate the next 10, 20, 50 years of college athletics, and maybe even how universities operate from that standpoint. So we're working on this 7 days a week. We have great partners. We're in a great conference. And fortunately, we're dealing with this in a manner that we're able to rely on our experts and do what's right to make sure that when we do return, and I'm extremely confident that we will return to play, that we always make sure that we put the health safety of not only of our student athletes, but our coaches, our fans, our professors, our administrators, that everyone involved with that we all feel good that the time is right for us to be able to come back and compete in the Big Ten.
Kevin, on that note, we'll leave it. We wish you good luck as you move through this very thorny decision process, and we appreciate your time today. Kevin Warren, Commissioner of the Big Ten. Melissa.
All right, Ty, coming up, one industry actually benefiting in the current environment, pizza delivery. Papa John's rolling out no-contact delivery. We'll talk to the company's CEO, Rob Lynch, coming up.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
It's TuneIn Sports on this day. On this day, 1984, Baltimore Oriole and MLB legend Cal Ripken Jr. hits for the Psycho.
And he hits this one high and deep to left. Back goes Darren Bragg to the warning track. It's gone. A two-run homer by Cal Ripken gives the Orioles a 3-1 lead. His fourth home run of the season. That's a great formula.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn. To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip 3, have a game night. In fact, why not make it a game day? Whether you're quarantined with kids or roommates, nothing passes the time like a game of cards, Pictionary, charades, dominoes, or Never Have I Ever. If you've got the hardware, break out the video game console and enjoy hours of guilt-free gaming. For more indoor inspiration, search Listen from Home on TuneIn. Want to relive the glory of college football?
Balls over a man, into the end zone,
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU. Get yours.
I want to take a check once again on the markets, and it does seem more of a risk-on sort of day with technology leading the way. The Nasdaq here is up by more than 1%. Information technology, the sector, is higher for the year now, thanks to today's performance. And take a check on shares of FLIR, F-L-I-R is a ticker there. It is a maker of thermal imaging cameras. There's a lot of positive analyst commentary about how FLIR can boost sales of these thermal imaging cameras now in the time of the pandemic and could widen its customer base beyond airports, et cetera, to schools and businesses with the pandemic going on and employers' desire to check temperatures of employees before they get to work. FLIR up almost 10%. Meantime, shares of Papa John's hitting its highest level in nearly 3 years today, despite reporting a mixed quarter and cutting guidance. The company is seeing a boost in delivery as a result of the lockdown and having its highest sales growth since the removal of founder John Schnatter. Of its 2,100 international stores, 375 are closed, mainly in Europe, Latin America, and the Middle East. For more, let's bring in Kate Rogers, along with Papa John's CEO and President, Rob Lynch. Kate.
Melissa, thanks so much. And Rob, thank you for joining us today by phone. We are happy to have you here.
Hi, Kate. Hi, everyone. How are you?
We are great. So let's begin here. Papa John's is really one of the brands that analysts said would be best positioned to withstand any potential slowdowns due to COVID. You certainly met those expectations. 27% comp in April, 1 million new customers for that month. How many of those new customers do you think you hang on to as we move forward and things begin to open up?
I think we hang on to a great majority of them. We are seeing our customer service scores go through the roof with the launch of our no-contact delivery. Our customers really see us going the extra mile to take care of them and protect them and keep them safe while keeping our employees safe. So with that, customer service scores going so high, I think that we have a great chance of keeping those folks long after we get through these challenging times.
So there's no doubt that consumer behaviors will, of course, shift because of everything that's gone on over the past few months. What changes do you think will stay in terms of routines, perhaps more ordering in? And you mentioned contactless delivery. What do you think the future looks like for Papa John's and other pizza players?
Yeah, I think as long as customers have some concerns over their personal safety and health concerns, there's going to continue to be, online digital e-commerce behavior, and I think customers, particularly in the restaurant industry, are going to continue to rely on services like ours, where we can deliver safe, high-quality food to their homes.
Within the restaurant industry, there's a lot of concern right now about supply chains. How secure is the Papa John's supply chain right now, and do you have any concerns moving forward?
We are really a vertically integrated company, so we have a lot of control over our supply chain. We work very closely with our partners, our supply partners, and, we knew a lot about how this was going to play out from our markets in Asia, particularly China, Korea, and we got out in front of it. I give a lot of credit to our team and reinforcing, our supply chain and building inventories and working with new suppliers to make sure that we had redundancy. So we feel very confident in our ability to deliver our business model moving forward.
Continuing the theme, Rob, of what continues once the pandemic crisis abates, management on the earnings call indicated that they believe about 10% of orders right now are stay-at-home orders, 10% of additional sales in April. And I'm just wondering how much you think that goes back to normal when people no longer stay at home. Will we lose that?
So, 27% comps in April, best month in the company's history, and we said that about 10% of that can be attributed to the tailwind of COVID and the new behaviors. So that means that there's double-digit growth that is built in around other things, and those things are primarily focused on our product innovation, our partnerships with our aggregator partners, and our loyalty program, which is really picking up momentum. As you mentioned, we have 1 million new customers coming into the franchise. A lot of those are coming in through our loyalty program. So those are things that we had put in place prior to the pandemic and will be around regardless of how long this situation continues. So we feel very confident that we have the infrastructure in place to deliver long-term sustainable growth.
Rob, to just circle back to supply chain, because I'm sure investors are curious, with regard to meat and cheese, you've been talking about these papadilla sandwiches the company just added onto the menu. Have you stockpiled? Do you have enough moving forward?
Absolutely. We actually doubled our inventories in the month of March to ensure our business continuity. And then we also have brought on new suppliers and are working with our long-term suppliers to make sure that we can continue to deliver not just our pizza, but our innovation. Papadillas has been a huge win for us. We launched them back in February, becoming a big part of our business model, very incremental to our core business of pizza.
You've also hired 12,000 new employees over the past 6 weeks. Do you anticipate needing even more workers moving ahead as demand picks up? And will demand be there for those workers that you've brought on?
Morale at our company has never been higher, and everyone from top to bottom feels great about our ability to help out our communities in need, and that includes creating a lot of jobs and hiring a lot of people. And, we are focused on that. We need staff. We need to hire even more people to meet the demand. So we're going to continue hiring, and we're going to continue creating jobs, and we're going to continue to make sure that our employees and our customers are able to safely deliver food and help out the communities in need.
So Papa John's did not apply for a Paycheck Protection Program loan you mentioned on the call. Obviously, that's an option that many of your franchisees had. Do you know, have they applied? Have they been successful? And what are their biggest concerns right now?
Our company, as a company, we decided not to go that route. We felt like those programs were going to be needed by a lot of people out there that were in a lot different circumstances than us. So we chose to pass on applying for those loans. Now, our franchisees are small business owners. I think, the story's been covered well. They have had challenges over the last couple years. They're coming out of those challenges. We're seeing our franchisees return to profitability and are very excited about the future. But each one of them is going to need to make their own decision based on the circumstances surrounding their own businesses on how they approach the government programs.
Okay, Rob, thank you so much for joining us today. We appreciate it.
Thank you so much.
Tyler, back over to you.
All right, thank you very much, Kate and Melissa and Rob Lynch. Up next, there doesn't seem to be very much these days that Republicans and Democrats can agree about, but there is one key issue that does have bipartisan support. We'll give you the surprising poll numbers when we come right.
Get the latest breaking news alerts and listening suggestions for new stations and podcasts. Let TuneIn keep you in the loop with push notifications. Just go to your device's settings and allow push notifications from TuneIn to get live alerts and recommendations on the audio you want to know about.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The Woj Pod with Adrian Wojnarowski.
Doris, you had reason to believe that you needed to get a test for the coronavirus.
Right. Well, let's just start with the headline, which is I did test positive for COVID-19. I was so tired from Saturday the 14th through Tuesday, March 17th. I kid you not, I could not be out of bed for 5 minutes without needing to go back to bed and lay down.
Search the Woj Pod to listen.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back, at the wall, it's gone!
Search classic game replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with it, over to Reese for one, back to Hodges. It gets away from him, Ferris trying to go to second.
It's on demand, it's free, and it's only on TuneIn.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration, search Listen from Home on TuneIn.
Exactly who should get money from a next stimulus package from the U.S. government? The answer may not surprise you, but the fact that it has bipartisan support, well, that just might. And Kayla Tausche has the latest in our States of Play poll. Kayla.
Tyler, in our fourth installment of Battleground State Polling with Change Research, we found that one particular area of stimulus gets bipartisan support, and that is everyone who qualifies in America getting a stimulus check from the federal government. According to the poll that was run over the weekend, asked whether the government should keep sending these stimulus checks for the duration of the pandemic, 74% of respondents said, yeah, they should. More than half of Republicans supported this idea, and nearly all Democrats did. House Speaker Nancy Pelosi has argued that the government should provide replacement income for Americans until unemployment gets back below pre-pandemic levels. Now, another area that got bipartisan support, stricter regulations for the small business loan programs. More than 3/4 of respondents across all parties say there should be more rules so that money ends up in the right hands. And while respondents said that swift, continued, vigorous action in Washington is warranted, they also say their own household is looking okay. Optimism about job security and personal finances rebounding in the last month, but only a third are optimistic about the U.S. economy as a whole. Finally, with President Trump suggesting last hour that schools should reopen while teachers over the age of 60 should not go into school, we did have some polling about whether there is support for schools reopening. You might not be surprised, Tyler, to learn that that does fall on bipartisan lines. 4% of Democrats say it's safe to go back to school, while 57% of Republicans do. But of course, that is going to be a decision left up to the individual states. Back to you.
And in the state where I live, and I think also down where you are, they have canceled school just yesterday, I believe it was, for the rest of the school year. Let me ask you a question here, because talking about giving a guaranteed payment to individuals and that having bipartisan support kind of surprises me, because it sounds a lot like the leading edge of what's been called the guaranteed basic income, which I don't think a lot of Republicans do support.
It does sound very much like this, but Republicans who support this, Tyler, would say this is temporary, this is an act of God, this is an external force that no one saw coming, and that no American, by fault of their own, should end up having to pay for this. So that's how ideologically a lot of Republicans can wrap their minds around this, although until we know exactly how long this will last, how much it will cost, and what it will do to the deficit, you will still have some skeptics about that idea.
Kayla, thanks very much. Kayla Tausche reporting. Melissa.
All right, up next, we'll get a final check in the market.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hey, it's Jacoby here from Jalen Jacoby, and after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our After Show right here on ESPN Radio on Sunday nights after the episodes air, and they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today.
Ask your broker about BAM-insured municipal bonds.
No, I love these fries.
You know, the chef here trained in France.
It shows.
So good.
Oh, hey, did you say you needed help with investing? Because I know someone who's really great.
And you trust him?
Totally. Yeah, we went to school together.
I'll check him out on investor.gov. So what'll it be? I'll just have the burger.
Before you invest, get the full report. Check out an investment professional's background for free on investor.gov. Before you invest, investor.gov.
I'm always walking to the same old place, just in case I see your face. I may be acting crazy, now it's getting late. You took my heart away, but I'll be okay, 'cause in my dream world, I'm still your dream girl. Ooh, I'm still your dream girl.
And a check in the markets. The Dow is in negative territory right now, close to the flat line. Again, it's the Nasdaq that is holding up. It has been throughout the session, up by 1.2%. Again, information technology on the S&P 500 as a sector is now positive for the year, Tyler. And I was talking before about a risk-on sort of day. I mean, take a look at the TLT, the bond ETF. We're finally seeing signs that people are getting rid of their bonds in order to buy stocks. That's down by about 1.8%, with the 10-year yield the highest level since about a month ago now.
I would guess that there's going to be a bit of an acid test over the next 2 days with the unemployment claims data that comes out tomorrow, and then the big Megillah on Friday, which would be the unemployment numbers for the month of April. And they will be a real, I think, test for investors' mettle and their stomachs, as we see, obviously, tens of millions of Americans who have lost their jobs, and probably an unemployment rate that is something we haven't seen in this country in decades.
And what won't be in those numbers, Tyler, will be the number of Americans being asked to give up parts of their salary while still employed. That, of course, is a concern because they have less money to spend and could be facing hardships themselves, which have ripple effects throughout the whole economy.
Yeah, no, it's absolutely true. I mean, the way this is going to ripple through the economy is really unfathomable right now, and how long it lasts is another matter. Melissa, it's great to have you back on Power Lunch. Great to see you. We'll see you tomorrow, I hope.
See you tomorrow.
All right. Thanks for watching, everybody. Our breaking news coverage continues into the last hour of trading for this Wednesday with the team from the Closing Bell. Take it away, folks.
Tyler, Melissa, thank you, and welcome to the Closing Bell. I'm Wilfred Frost, along with Sarah Eisen. Stocks struggling around the flat line, except for the Nasdaq, which is surging again, up over 1% with 59 minutes left of trade. The Dow and the S&P roughly flat. Let's have a look at what's driving the action. New data from ADP showing record private sector job losses. More than 20 million Americans losing their employment in the month of April. Oil has turned lower, snapping a 5-day winning streak as oversupply fears weigh once again on the energy sector. And with today's gains, the Nasdaq is just points away from going flat for 2020 as tech continues to lead the gains. Financials and utilities amongst the worst performers today.
Coming up on today's show, we will speak exclusively with SAP CEO Christian Klein about his company's efforts to develop a coronavirus contact tracing app, plus what he's hearing from customers about the state of global business. And the earnings reports will come fast and furiously this afternoon, highlighted by Lyft, Grubhub, Etsy, PayPal, and T-Mobile. And we will be speaking with the brand new T-Mobile CEO, Mike Sievert, ahead of his company's conference calls just after his numbers cross. Let's drill down on the big stories we are watching in this final hour of trade. Mike Santoli following the volatile trading action. Steve Leisman with a look at the economy and another sobering jobs number today. And Deirdre Bosa is covering Uber and Lyft. Mike, though, start us off with what you're seeing in the market today.
Yes, Sarah, S&P struggling to stay flat today, actually struggling to stay in this zone for the past few weeks. Look at a one-year chart of the S&P. You see how it's flattened out here since mid-April. Is it resting? Is it rolling over? It's a little bit of a standoff right there. I think if people are looking at this as saying, right now it's preserved most of the rebound rally gains. Perhaps if it got down in the 2,700 range, maybe it starts to change this idea that it's just kind of pausing for a moment. Last week's low, 2,720. So we're still kind of treading water. And of course, as everybody's been mentioning, mostly thanks to those very large mega cap growth stocks not too attached to the economy. Here we go. What's not staying still is the valuation on a forward basis. This is the forward PE of the S&P 500. The index is flat. We're now above 20 on a forward PE basis, of course, because the earnings forecasts are going down fast. Now we're around $130 per share, looking at an 19% decline from last year. So clearly, the market is not really trading on this year's number, but it's going to show you how deep the hole is. Now take a look at this other chart. It is the PE of the median stock in the S&P 500. So it doesn't really get affected by the mega caps. And this is on a trailing basis. So you see here again, around 20. Now, it has been higher here in a couple of years ago when we did have that big surge before the tax cut. But it does show you that on a valuation basis, the market doesn't have really a big cushion. So therefore, it's about the speed and the cadence of any comeback in earnings, which, it's very hard to project, but see if some investors are willing to do that at this point, guys.
Well, that's sort of what I was going to ask, Mike. We've gotten now a pretty decent sized batch of earnings and economic data. Is there any clear picture as to where the economy goes and how long this lasts, arising from any of that information?
I don't think just yet. Really, all we're doing right now is defining how deep the hole became in April. Obviously, people are fixating on the incremental moves toward a reopening. But I think, you can see the market action itself. It is money flowing into those companies where a comeback is not really relevant that much to the outlook, right? The big five of the NASDAQ. So until that really changes, you wonder if in fact the index as a whole can just kind of hold in place here, give a little bit, maybe make another foray to the upside as you get that incremental information. But it's not because anybody has a real fix on how that's going to look in coming months.
Mike, if it's not PE multiples or any other valuation multiples that has some kind of E or alternative to E on the bottom, what are people looking at? I guess technicals is one. Are there other things like dividend yield where we have seen companies reiterate their dividend that people are trying to key off?
I mean, on a market-wide basis, dividend yield's not helping you very much because the overall dividend amounts are going down. Yes, there's an advantage over bond yields. I think people are looking at equity free cash flow yields, perhaps, compared to corporate bond yields. Maybe that's going to give you a little bit of a better idea. Also, I would point out, if you go back to 2009, that forward PE also shot up, went vertical, because people just said, we don't care about this year. We're going to look on the other side for the comeback. The problem is it was at a much lower absolute valuation level, more like 14 times forward, not 20.
Mike, thanks as always. See you again later. Turning now to the economy and another sobering look at the jobs market as new data shows private payrolls plunged by more than 20 million in April. Yesterday on this show, we spoke with Fed Vice Chair Rich Clarida about whether more monetary and fiscal action is needed.
The CARES Act was absolutely essential because, the Fed has lending authority but not spending authority. So what we can do is we can lend money to companies that are solvent with the expectation that they'll be paid back, but we can't transfer income to households and firms. And obviously the CARES Act, through Paycheck Protection and unemployment benefits and other provisions, was very important to the economy. And it may well be the case, depending on how the economy evolves, that more policy support will be needed from the Fed and possibly also fiscal policy.
Bring in CNBC senior economics reporter Steve Leisman. Steve, a terrifying number once again on the employment front, albeit roughly in line with expectations. What are we focused on ahead of Friday?
All the things that Rich Clarida was talking about, this idea of it's really a two-stage process. First off, you don't want to be benumbed by these terrible numbers that are coming out. Just because they're expected doesn't mean they're any less horrific. We got to log that in. This is a terrible situation where up to 20 million people in America have lost their job. But the key right now, they're trying to figure out, okay, we expected this. What comes next? Can we, is there going to be residual damage to the economy? And if so, does the Federal Reserve has to be ready with a set of programs to address that? We talked to Jim Bullard this morning just as the ADP number came out, and here's what he said.
There's no question this is very, very disruptive, and we expect a very sharp increase in unemployment, a very sharp job loss. But we understand the shock. We understand what we're doing here. I think everyone gets the program. We have to invest in the national health and get to the other side of this crisis.
Let's take a look at the numbers here. You have the 20 million that ADP reported today, which is versus a forecast of 21 million. There was no possibility of an upside surprise on this. If it was 10 million, if it was 5 million, it would still have been horrific. We would have thought it was undercounted. Another 3 million jobless claims expected tomorrow. That would bring the total up to 30.3 million. Looking in depth at the ADP number very quickly here, you see that large businesses and small business, the very smallest, did all lose jobs, but small businesses worse than the large businesses. A 16% decline from the employment level in March reported in April, and just 13% for the largest companies. So everybody's shedding workers here. And a big question looking at whether or not the PPP program is working, we're just not seeing it right away here in these job numbers where small businesses, the very smallest, are losing so many workers.
Steve, I guess that's one question as to whether PPP is working in the immediate short term. The other question is whatever level of success it's had is how long that can last, and whether there's scope either to extend that program and increase it significantly, or whether we just have to reopen the economy almost regardless for the impact it has on health.
You know, Wilf, I think your question kind of answers itself, that there is no cure for this that's going to replace reopening the economy. People are going to lose their jobs, and increasingly, because the high-frequency data that I'm looking at shows two things. One is that stores are still closing, and two is that we're not seeing much increase at all in the traffic numbers that show people are either going back to work or going back to the mall. So we can try these programs. The best thing we can do, I think, is to provide help to people to tide them over. But I don't think we can restart an economy that it's not ready for the people in it to restart.
Steve Leisman. Steve, thank you. Adding to those job losses, Uber announcing thousands of layoffs earlier today as rival Lyft gears up for earnings after the bell. Deirdre Bosa has more on both companies for us. Deirdre.
So, Sarah, we know that it's going to be ugly. The question is how bad and whether that's already baked into ride-sharing share prices. As you mentioned, Uber laying off about 14% of its workforce. Last week, Lyft said it was cutting 17% of its workforce. Now, ride revenue has, of course, fallen off a cliff. Both companies have withdrawn their guidance. So they're doing everything that they can to cut costs right now. Unlike Uber, Lyft has not updated investors on its financial position since the pandemic began. As of the end of last year, it had just under $3 billion in cash and cash equivalents, But remember, it also burned through more than $2.5 billion last year in net losses, which was an IPO year. Now, also unlike Uber, Lyft does not have a food delivery business, and it only operates here in North America. So it would have seen the effects of the coronavirus lockdowns show up partway through the quarter. So it may not be as bad as, say, what Uber has experienced all around the world. A key question as we go into these reports is whether they're now seeing any kind of their businesses rebound as some states lift those lockdown measures. Now, beyond the financials, guys, ride-sharing is really facing this existential question. What does their business model look like? What does the future of the gig economy look like in a world where social distancing is the norm?
Thank you very much for that. We've got 50 minutes left, by the way, of the session. At the moment, we are flat. S&P just higher, Dow just lower. NASDAQ, though, holding on to a nice 1% or so of gains. After the break, we'll speak exclusively with the SAP CEO, Christian Klein, about his read on the state of global business and his company's efforts to develop a COVID contact tracing app in Germany. We'll be back in a couple minutes.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest editions.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
It's TuneIn Sports on this day. On this day, 1984, Baltimore Oriole and MLB legend Cal Ripken Jr. hits for the Psycho.
And he hits this one high and deep to left. Back goes Darren Bragg to the warning track. It's gone. A two-run homer by Cal Ripken gives the Orioles a 3-1 lead. His fourth home run of the season. That's a great formula.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back, at the wall, it's gone!
Search classic game replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with it over to Reese for one, back to Hodges. It gets away from him. Barris trying to go to second. Hodges.
It's on demand, it's free, and it's only on TuneIn.
Brian Windhorst and the Hoop Collective Podcast.
What about Giannis Antetokounmpo? He is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective.
Search the Hoop Collective to listen. To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip 3, have a game night. In fact, why not make it a game day? Whether you're quarantined with kids or roommates, nothing passes the time like a game of cards, Pictionary, charades, dominoes, or Never Have I Ever. If you've got the hardware, break out the video game console and enjoy hours of guilt-free gaming. For more indoor inspiration, search Listen from Home on TuneIn.
With the NHL season temporarily on ice, now is a good time to...
Welcome back. Here's a check-in on the markets with, 47 minutes left of the session. Dow down 0.2%. S&P's flat. NASDAQ still holding on to nice gains of 1%. In terms of the sector performance, tech at the top, as you'd expect with that NASDAQ performance. Utilities, energy, financials at the bottom today. Let's have a look at some individual market movers. Shares of Wendy's rising today after reporting customers are returning and sales are turning around. Same-store sales fell just 2.1% last week after plunging in March amid the first 2 weeks of April. This despite reports of beef shortages at some locations, up 7%. Activision shares rallying after reporting an increase in engagement across all of its franchises in yesterday's earnings report. CEO Bobby Kotick weighed in on why consumption is up for him.
there's definitely an impact that's come from people being at home and having more time to be engaged. And I think we offer a form of entertainment that's very social. So when people are in a place where they are separate and they don't have the ability to connect socially, having this social lens that you view through entertainment is something that I think is really valuable right now. And that's a big part of why our consumption is up.
That stock up more than 5% today, 6% now.
German Chancellor Angela Merkel announcing the country will be taking steps to ease its coronavirus lockdown. To help with those easing measures, Germany is calling on technology companies like SAP and Deutsche Telekom to work on a contact tracing app to track infections in the country. Joining us now to talk about those plans and the path forward is SAP CEO Christian Klein. Christian, good to have you here. What exactly are you working on, and how is it different than what Apple and Google are doing in this country?
Thanks for having me. I hope you're doing well. Yeah, so we are helping the German government, to develop a tracing app together with the Deutsche Telekom. And the tracing app will help Germany indeed to solve the lockdown in the country, to come back to normal business very soon. And we are on a very good path on delivering this app very soon to the market.
What are your expectations as to whether this will help Germany's return to economic activity? And where do you stand, given your huge customer base across Europe, on the likely shape of economic recovery in Europe as a whole?
Absolutely. This app will help Germany tremendously to overcome the lockdown, to really trace where are the infected people and to lower the curve and to not fall back again into a lockdown. On a global scale, we actually seen already in China that our business is recovering. There we are already fully back to business. We are meeting customers. In Europe, as I just have mentioned, there are now plans of a ramp up of the economy. And in North America, we are expecting now further important decisions to also come back there to a good business. For us, it's even more important now that we emerge out of this crisis very strong. And as more and more customers now realize it is important to get more resilient as such a crisis, I'm confident that we are providing exactly the kind of solutions what the customers need to succeed in the digital age and to get more resilient against such a crisis.
Just on contact tracing, what about the privacy supporters or advocates that are concerned that it's giving too much personal information, literally tracking them to companies like yours or to governments that, when we're done with this health crisis, could be used for malicious intent or just is an invasion of privacy?
During this project, we delivered the app in an agile way, and we were in contact with all the relevant security committees, of Germany, but also across Europe. So we made sure that we applying the highest security standards so that the data of our citizens is extremely secure.
I wanted to ask Christian about your own company's guidance recently released. So 2020 guidance, everyone was sort of surprised to the downside by, but I think pleased that you reiterated the firm's long-term targets, which are timed to come into place by 2023. Does that suggest you see quite a big short-term impact, but no long-term impact by the pandemic?
Absolutely. I'm talking to many CEOs these days, to many politicians. And SAP was already talking about the intelligent enterprise before the crisis. And now in the crisis and after the crisis, all of these decision makers are looking for intelligent software to make their supply chain more resilient, of applying new business models to not, get blocked by this lockdown, of having intelligent commerce solutions, of having intelligent solutions to provide new flexible financing models to their customers. And all of these solutions are getting provided by SAP. Only SAP can provide the intelligent enterprise end to end. And this is why we are so extremely confident about our financial ambition in 2023.
Well, you've obviously got a great read on company spending and what IT budgets are looking like. And you've also got a pretty good global picture. So which parts of the world are you seeing strength and which parts are you seeing weakness?
As I said before, China is already coming back to business, and we see that there is a huge recovery of pipeline already. The same is happening actually in Europe. In North America, we are still waiting for some of the decisions to come back to normal business. But the good thing is that everyone is realizing that a digital transformation is not anymore optional. It's a must to succeed in the digital age. And this is why we are so extremely confident that we will overcome this crisis in a very strong fashion.
Christian, until recently you had a co-CEO. The structure clearly has changed of late, and part of the reason given was that the pandemic has changed the environment. Why has the environment meant the previous structure that had served for quite some time and served the company well was no longer the right structure?
Jennifer and I had a great start into the co-CEO model. We made some very important decisions for our customers to simplify, for example, the organizational setup, to make it easier for our customers to do business with SAP. Afterwards, we were heading into this unforeseen crisis with lockdowns in one country after another. And in such a crisis, you have to do, decisions, fast decisions, agile decisions on an hour-by-hour basis to safeguard our customers, but as well as our employees. So Jen, everyone felt that we have to come back to a clear leadership structure.
But Christian, I mean, clear leadership is always needed for any company, always, whether you're making decisions every day or every hour. So why the kind of clear reason that warranted her leaving the company?
When you're acting in such a co-leadership model, of course you have to make decisions, on a frequent basis, and you have to share certain core beliefs about the way going forward for this company. And Jen and I were on many of these topics on the same page. Of course, there are always a few topics where you have differences on opinions. And when then this crisis kicked in, of course, this accelerates, because then you have to have the accountability to make clear decisions in a fast and in an agile way. You cannot parallelize this company. And this is why we both felt that it's the best for SAP, our customers, and our employees to come back to a sole CEO leadership model.
Okay. I mean, Chris, I'm not trying to go over the point ad nauseum, but so you're suggesting now that you kind of don't have any discussions with any of your lieutenants, and it's just your way is the way forward, no matter what?
No, this was not so much about right or wrong. Of course, there are a lot of important decisions to take, about the way forward of SAP. And again, Jen and I were, for many of these points, we were on the same page. And there were definitely also not any personal issues relating into that. But in this crisis, we have to move now fast. Customers are now coming to us and asking, how can we overcome issues in our supply chain because of the lockdowns in certain countries? We, of course, have to also safeguard our employees. We have to decide, how fast we are ramping up our own operations. And this, again, is now very important that we do this in a distinct way. And going forward, the way how I see SAP is, as we are transforming into an intelligent enterprise, our mission has to be now to transform all of our customers into an intelligent enterprise, to help them to come through this crisis and also help them to become even more competitive in the digital age.
Christian Klein, thanks for joining us.
Thanks for having me.
After the break, the path forward for retail, one national chain revealing new details about its plans to reopen their doors, but with some major changes for the customers. We'll explain after the break.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn. Get the latest breaking news alerts and listening suggestions for new stations and podcasts. Let TuneIn keep you in the loop with push notifications. Just go to your device's settings and allow push notifications from TuneIn to get live alerts and recommendations on the audio you want to know about.
Hey, it's Jacoby here from Jalen Jacoby. And after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our After Show right here on ESPN Radio on Sunday nights after the episodes air. And they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today. To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration,
Gap unveiling new details about its plans to reopen stores, but customers will see some major changes to the shopping experience. Courtney Reagan joins us with the story. Courtney.
Hi, Sarah. So welcome to your new shopping normal. Gap is just among the latest retailers to announce its gradual reopening plan. We're going to see a little bit of a different experience when you go into those stores. So the retailer does plan to open 800 of its Gap, Old Navy, Banana Republic, Athleta, and other brand stores by the end of the month. 800 starting in Texas this weekend. The fitting rooms, though, those are going to be closed. The restrooms, too, so make sure you plan ahead. Returned merchandise, it's going to be quarantined effectively for 24 hours before it goes back out into the store. And like other retailers, Gap said it will enforce social distancing in stores, mask wearing for employees and shoppers. Plexiglass will be installed at checkout. Hand sanitizer will be at the door. It is unclear, though, how many of Gap's 80,000 furloughed workers in North America will end up coming back. The company just doesn't have a purview on that yet, but says that they will work within the staffing levels that they need if they need to fill in some of those gaps. And also, it's unclear how those employees will feel about enforcing some of these new procedures. Now, Gap does say that only 20% of its revenue comes from enclosed shopping malls. So that could help because shopper surveys do seem to indicate shoppers are more reluctant to go into an enclosed mall than they are an open air center or strip center kind of location. Gap will be shipping from 1,000 stores and offering curbside contactless pickup at 75 locations to get started, and that number will eventually ramp up. But it's going to be definitely a new experience. Back over to you all.
I didn't even think about the return issue. I mean, that is wild that they have to quarantine.
Yes.
I guess it makes sense. The returns. Courtney, Gap couldn't get people coming through its doors before this crisis. How do they expect they're going to be able to do that now when you have so many millions more unemployed and people, some people at least afraid to go out?
Yeah. I think that is such a huge question, Sarah, for Gap and for others, right? It wasn't the only physical retailer that was struggling to entice shoppers to come to the store. So I think that they would sort of point us to the e-commerce operations, which have done fairly well for it, and they're trying to use those stores, obviously, also to help fulfill those orders. But this is going to be tough. Think about all the retailers that have spent so much money and time on the experience in store, and a lot of that now is kind of out the window, right? If you have to limit the number of people in store, if you really can't have a personal interaction because you have to stand far away from each other, no restrooms, no fitting rooms. This is going to be a tough sell.
Courtney, thanks so much for that. Still ahead, a barrage of earnings are set to hit the tape after the bell, including Lyft, Grubhub, Square, PayPal, and T-Mobile. We'll break down all of those reports, and we'll speak with T-Mobile's new CEO ahead of his earnings call. As we head to break, let's have a check on bonds. Yields moving higher today. 10-year yield at its highest level since mid-April, 0.7%. It was even higher than that a few moments earlier. And short end falling a little bit, as you can see, yet that slight steepening of the curve once again not helping the banks, which are towards the bottom of the pile. We'll be back in a couple of minutes.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Want to relive the glory of college football?
Balls over a man, into the end zone,
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There's going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
Search classic game replays to listen for free. It's TuneIn Sports on this day. On this day, 1984, Baltimore Oriole and MLB legend Cal Ripken Jr. hits for the Psycho.
And he hits this one high and deep to left. Back goes Darren Bragg to the warning track. It's gone. A 2-run homer by Cal Ripken gives the Orioles a 3-1 lead. His 4th home run of the season. That's a great formula.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Introducing a new podcast, ESPN Daily, hosted by me, Mina Kimes. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. The best sports story all day, 20 minutes a day, 5.
Welcome back. We are taking a look at the market. The Dow is down about 0.4% right now. Here's the sector heat map inside the S&P 500. 3 groups are green right now. Technology continues to be strong. It's up more than 1%. Consumer discretionary communication services also green. Utilities, financials, and energy are the worst performing groups right now. NASDAQ still positive on that strength in technology on the day. The S&P is just down about 0.25%. Quick check on shares of Beyond Meat. That stock jumping after reporting sales that more than doubled in the first quarter thanks to a fresh demand from retailers looking to bulk up on alternative meats.
Time now for a coronavirus news update with Frank Holland. Hi, Frank.
Hey there, Wilf. Here's the latest on the pandemic. California reporting its largest one-day increase in virus cases today, even as Governor Gavin Newsom is expected to announce reopening steps tomorrow. The state reporting 2,603 new cases and 95 new deaths. 64 New York children have now been hospitalized with a mysterious inflammatory illness that's possibly linked to COVID-19. Symptoms appear days to weeks after acute COVID-19 illness and include fever, abdominal issues, and trouble breathing. The United Kingdom and Europe have also been tracking cases of this same illness in children. And April was the strongest month for the App Store in nearly 3 years, according to a new research note from Morgan Stanley. Total downloads surged 40% year over year last month as the pandemic forced more and more Americans to stay at home. As always, for more coronavirus coverage, head to CNBC.com. Sarah, over to you.
Frank Holland. Frank, thank you. After the break, Disney, the latest company to suspend its dividend, joining a host of other big name firms looking to cut costs in this environment. We're going to discuss the hunt for resilient dividend payers that you can count on next.
CNBC Sector Sword is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at Sector Spiders.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio.
During turbulent times, consider protected lifetime income from an annuity as part of your retirement plan. This can help cover your essential monthly expenses. Learn more at protectedincome.org.
You should be mad at leaf blowers. You should be mad your neighbor always wants to hang out. And you should be mad your smart fridge is unnecessarily complicated. Making ice. But you're not mad because you have E-Trade, which isn't complicated. Their tools make trading quicker and simpler so you can take on the markets with confidence. Don't get mad. Get E-Trade and start trading commission-free today. Birthdays aren't canceled. Hope isn't quarantined. First words aren't delayed. Caring isn't postponed. Courage isn't on hold. And love hasn't stopped. U.S. Bank thanks you for keeping all of our spirits strong. We've donated millions to those in need and are always here for our customers and employees.
To all of you doing your part, on the front lines or at home, turning those living rooms into gyms, getting creative in the kitchen, taking a minute for yourself, and trying to get a good night's sleep. Thank you for doing what you can. We're all in this together, so here's a little something to help.
On CNBC, the latest on relief programs, tax help, and state-by-state updates. Protect your business. Get advice. We're here to help with all-day coverage on air and on cnbc.com/smallbusiness.
Welcome back. Disney, the latest company to announce it's suspending its dividend. The move aims to save the company $1.6 billion. More than 200 publicly traded firms have cut dividends this year, 45 of them on the S&P 500 index, the highest level since 2009. Joining us now, Tobias Lefkovich. She's the chief U.S. equity strategist at Citigroup. Tobias, as ever, great to see you. Thanks for joining us. I mean, where does the number of dividend cuts we've seen so far stack up relative to your expectations, especially of what's still to come, given that we're only, I guess, a little way through earnings season so far?
So we are concerned about the dividend environment. With earnings likely to be down this year in the order of 25%, we could see dividends down that much, and even as much as 30%, depending upon if the banks have to kind of join the party. For the most part, banks have suspended their buybacks, but could they be almost publicly shamed into also suspending dividends? And that's going to be an interesting thing to watch.
Yeah, they say that they're preserving those dividends for now. Tobias, how do we find companies that are not suspending their dividends or even raising their dividends? Because there are a few of them out there.
So there's certain industries that typically, do well even in a difficult environment. Staples, utilities, some of the large cap tech names that are less, subject to the kind of cyclicality or even the social distancing aspects today. What's been a bit more interesting this time around is because of the shelter in place, work from home, social distancing, certain areas in consumer services that we would have not seen get hit. For example, the hospitality industry is obviously getting hit right now. But there are two ways. One is look for the industries that don't typically have the same kind of cyclicality, have more resilience. And the other one that we've kind of looked at is which companies have above market dividend yields, but also have low CDSs. So areas where the bond market's telling you that these balance sheets are pretty rock solid.
Tobias, do you think dividends, when you speak to your clients, dividends are a key factor they're weighing up at the moment? I mean, clearly getting a yield that's a bit higher than bond yields at the moment sounds attractive, but at the same time, as Mike Santoli always points out, even if you can get a 3% dividend yield from a certain company, the share price moves tend to be much more than that in multiple directions each week.
Sure. I think a lot of people were feeling pretty resilient early this year in the bank stocks for that reason. The dividend yields were rising and there was the capital return stories. And then you've seen many of these stocks go down 30-40%. So, giving up the dividend yield would have been probably a smarter move back in January. On the other hand, you also have companies that have looked at their dividend yields well above the market. And that's usually kind of a signal that they're about to be cut. So I think investors have to be able to kind of parse through that. And again, that's why we look at things like those CDSs to give us a sense of what the bond market believes about the potential for those dividends to be cut or not. Essentially, let the bond market do the research for us.
What about capital spending, Tobias? How hard is that going to be hit?
So look, we think uses of capital by businesses across the board are going to be hit. So again, dividends could be down as much as 30%. They don't have to go there. Again, the question mark is the banks. But we think capital spending will be down over 20%. We think buybacks will be down the order of 50%. Some of that because of industries that literally can't do it anymore, and other industries that are just trying to preserve cash just to get them through this chasm, if you like, of the coronavirus-led downturn.
Tobias, overall, weighing in the dividend point and others, what's your top sector pick for the rest of this year?
So I'm going to be a little bit careful and just not talk about one. I'm going to talk about a couple. I think healthcare is certainly an area that we were concerned about earlier this year because of political dynamics, and obviously with the coronavirus and with the need for the healthcare industry to be kind of our heroes right now. That's kind of gone away on the wayside in terms of populist political rhetoric. I think on the other side, you could be looking at financials. And even within tech, I think there's more interest from our perspective, in areas like chips and tech hardware, and less so in the software and services area, where everybody's already pretty crowded.
Are you still pretty cautious on the overall market?
Yeah, I still am, Sarah. I think the market's a little bit ahead of itself right now. It's interesting when I talk to investors, I kind of get the commentary of, well, everybody says the market's run too far, they're cautious, so therefore I want to buy the market. And I almost think they're talking themselves into some justification or rationalization. There's been a lot of what I call FOMO, which everybody knows is fear of missing out. But there's also been a lot of FOMO, which is fear of meaningfully underperforming. So as the market kind of runs, people feel compelled to jump in. And again, we think the market's probably, call it 5% ahead of itself.
5%. All right, Tobias, thank you. Good to talk to you, Tobias Lefkovich. This is the last commercial we are going to take before the close. Up next, uninterrupted coverage of the final minutes of trade when we take you inside the market zone. And as a reminder, you can always watch or listen to us live on the go on the CNBC app. We will be right back. 20 minutes left of trade.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get the latest breaking news alerts and listening suggestions for new stations and podcasts. Let TuneIn keep you in the loop with push notifications. Just go to your device's settings and allow push notifications from TuneIn to get live alerts and recommendations on the audio you want to know about. In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Want to relive the glory of college football?
Balls over a man, into the end zone,
Come explore TuneIn's Classic Game Replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
Search Classic Game Replays to listen for free. She only eats wild caught.
I need a price check on honey.
Don't get mad. Get E-Trade and get more than just trading. Investing, banking, guidance.
The Market Zone is sponsored by E-Trade. Trade commission free today with no account minimums.
17 minutes left in the trading day. Markets off by about 0.5%. The Dow is down about 150 points. NASDAQ is positive with technology outperforming again today. And backed by popular demand for his last chance trade, Ritholtz Wealth Management CEO Josh Brown. Josh, what are you picking today?
Wow, popular demand. I like it. I want to talk about home remodeling, home renovation, Home Depot and Lowe's specifically. These are the two biggest names in home remodeling. If you were around after the last recession, or even more, especially the one before that in the wake of 9/11, there was a major trend both in the stock market and in real life about nesting and people spending a lot of money on home improvement. In this crisis specifically, we have never had more time to sit around, stare at our walls, stare at the paint, the finish, the flooring. What do I want to do differently? So interestingly enough, Bank of America Merrill Lynch, which looks at aggregated credit and debit card numbers, were able to determine that home renovation spending was the only category within hardline retail that saw an uptick in March, while everything else fell off a cliff. And April numbers have been strong, too, according to their data. So I like both these names. On Home Depot, I think you keep it really simple. 214 is your stop, risking about 10 points. The market will tell you if these are going to roll over. You'll know you're wrong very quickly. But if it stays above that level, which has been recent support, I think you have a decent risk reward here. I like Lowe's, too. Slightly higher risk, I think, from these levels because the rebound has been stronger than Home Depot. But both should work for the same reason. If you're a longer-term investor, ignore the stop. If you're a trader, obviously know what your risk is going in.
Josh, now the question that everyone really cares about: what remodeling have you been doing at home?
I mean, we bought a house 11 years ago, so it never ends. Actually, it's just something's always broken or something's always making you sick of looking at it.
Long-term customer stopped. Then of Lowe's and Home Depot. Okay, there is the pick, the last chance trade for today. By the way, we've got 14 minutes left of the session. We're down 0.5% on the S&P 500. We're now in the closing bell market zone. Commercial-free coverage of all of the action heading into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day, as always, along with Josh Brown, who you just seen. Let's kick things off with the broader markets. As I mentioned, down about 0.5% on the S&P, down a little bit more than that, down 161 points in percentage in points terms. Basically back to the lows of the session, and NASDAQ giving up a lot of its gains, although it is still the outperformer relative to the other indices. It's still up 0.6%. Mike Santoli clearly slipping again as we approach the close. Only two sectors in the S&P holding on to gains: consumer discretionary and tech. Mike's mic is not good. I can hear Mike. It was great commentary, by the way. We're going to have to get it back. I'm a lucky one to hear it. Josh, clearly slipping a little bit here as we approach. I mean, do you get worried by some of these closes that we're losing steam, or the fact that we're staying within relatively tight range over the last couple of weeks compared to the prior month? Is that encouraging?
I mean, it's not discouraging because we're not free falling anymore. But you take technology out of the equation, and the stock market ex tech has been flopping around in a big range. We're now back to where we were on April 17th. So a lot of time has elapsed since then. We really haven't made progress, and I'm not saying we should have, because I think we're now in the phase where the idea of 20% unemployment, even if it's extremely temporary, meaning 1 quarter and not 2 or 3 or 4 quarters, it's a huge challenge for most of the real economy that isn't selling cloud software subscriptions. So I think the fact that we've got this entropy within the rally, internals falling apart, it all makes perfect sense based on what I would guess would be happening right now. And so I'm not screaming buying opportunity from the rooftops, but I'm also not going to cash and panicking.
So, Mike, Walt Disney stock today really encapsulates some of the indecision about, I think, the overall market that you're seeing today. It was up 3.5% earlier, despite, the suspension of the dividend, the bleak outlook, the fact that so many parts of the businesses, including parks in the profitable area there, are being slammed right now. The stock is flat. They're saying they're reopening Shanghai Disney on Monday. I mean, is this a reopening trade or not?
It's a reopening trade for anybody who's buying it today, and I think it also is a similar calculus to what you're finding in a lot of stocks, which is it's down from 150 to 100 in a few months. Clearly, it's baked in a lot of the weakness that everybody sees right in front of us, but just it's unclear when they're going to get back to those big cash flow generating parts of their business, which are the ones that are shut down the most right now, are going to come back. So it's those who feel as if, look, you always buy a Walt Disney, a kind of a leader in a big industry, industry on a big drop down like that, against those who say, I can't wait and have no clarity about it, so we don't know how long we're going to be effectively riding this shutdown trend?
Well, let's talk meat. More meat packing plants continuing to shut down this week from coronavirus outbreaks, disrupting the meat supply chain in the U.S. Earlier, I spoke to Rodney McMullen, chairman and CEO of the country's largest grocery market chain, Kroger, and he discussed how the company is dealing with these meat shortages.
If you're flexible on eating between chicken, pork, and beef, we constantly have one of those items in, or two of those, and usually three. We're working with all of our meat suppliers, figuring out how to get products that were diverted to restaurants before to get diverted to our stores.
Josh, you know we're coming to you on this. If you're even more flexible, besides just meat, beef, and chicken and pork, they're bringing on more Impossible Foods. It was just announced yesterday that that's going to go into 1,700 Kroger stores. Yeah. McMullen sounded actually pretty optimistic on alternative meat, that this is here to stay and that it's only going to accelerate this trend, seeing these shortages here and cooking at home. What say you?
So I concede the fact that less availability of one type of meat might lead to more discovery of another type. Unfortunately, I think people will make that attempt and they'll say, this isn't as good. When am I going to get the real thing back? So there's probably a decent-sized total addressable market for, quote, alternative meat. I don't think it's as big as the stock market thinks it is. So I'm not like trading Beyond Meat. I know it's up from 50 to 125. It's had a huge rally off its low, but it was a $240 stock too. So I don't know what it trades based on other than headlines. Not my cup of tea.
GM shares rallying after better than expected earnings. Phil LeBeau's got those details for us. Phil.
Wilf, a small profit in the first quarter for General Motors. Why was it only a small profit? Well, because COVID-19 took a big bite out of the automaker, $1.4 billion. Here's CEO Mary Barra talking about the impact during today's conference call.
The outbreak significantly affected EBIT adjusted in the quarter, and we expect an even greater impact in Q2 because of the production stoppage, a phased restart, and what we believe will be lower market demand.
So knowing that the second quarter will be slower than the first, here's the outlook for GM. They are going to plan to restart North American plants on May 18th. Let's be clear. It's going to be a phased, gradual startup of production. They're not going to flip the switch and have three shifts at every plant. They hope to rebuild, pick up inventory as quickly as possible. And the focus, cutting the cash burn. They ended the first quarter with $33 billion in liquidity. Now, plenty of money to make it through the second and the third quarter. Frankly, if they had no production at all, they could make it all the way to the fourth quarter. Having said that, for not only GM, but all of the automakers, the focus right now, cut the cash burn and save as much cash as possible. That's why when you take a look at GM, Ford, and Fiat Chrysler, consider this stat, guys. Combined, they all raised $45 billion in cash since March. That's their way of saying we need to have as much cash on hand to ride this out.
Phil, every time I read about these companies and some of the pain they're enduring, there's always the caveat, well, they're in much better shape than they were during the 2009 crisis when most of them had to go to the government for help. Having said that, how dire is the cash situation now? GM, I think, is the only one to record a profit so far after Ford's results were pretty bleak.
It's dire from the standpoint that if these plants start up, and let's say it's a pretty good startup in mid-May, and then you start to see gradually more shifts, more production. Dealers are selling more of these or buying more of these vehicles, and the retail sales, that's you and me going out to the dealership, that starts to ramp up. They'll make it through this. Now, the caveat here, Sarah, is if you and I don't go out to the dealerships, if sales still stay at a pace of about 9 million or 10 million vehicles, then it's dire. Then it's them saying, okay, we're going to have to make some other cuts, both in terms of what we're spending and what we plan to spend. And it's not to the point of asking the government for money, but you really want to watch what happens here over the next quarter or two for the automakers.
Phil LeBeau, thanks so much for that. Josh Brown, automakers, do you want to play in these names?
No, I think, Ford's the same price that it was 20 years ago. GM probably made its cycle high in June of 2018. I think that probably coincided with peak auto sales, or maybe it was a few months off. But so these stocks were not doing particularly well before there was a shutdown and a lockdown of 1/3 of the Earth's population. So I'm not sure why all of a sudden people are going to want to have a big position here. So the valuations are decent. They always have been. That never changes with the automakers. I think if you're going to be in these names, they should always be trades, and you should try to buy them on breakouts when there's momentum. And right now, of course, there's none of that.
How can you even tell, Josh, in this environment, whether a stock is cheap? I mean, you see the declines, 40, 50%.
Can't.
But how do you put a valuation on a company like this if you don't have any forward-looking view of what the business is going to be?
So the enlightened way to think about it is to say, okay, I'll take a cyclically adjusted price-earnings ratio. A company like GM that's been around for 70 years, you can do that with. You can do that with Caterpillar. You can do that with IBM. Not to say that one era is going to be the same as the other, but at least you're normalizing somewhat. And you're saying, okay, let's average this in with the other 9 years where there wasn't a global pandemic. What are the earnings power of a company like this typically? So that's that's the enlightened way to do it. And the other way to do it is just not play. So if you have a stock that's technically in no man's land, then forget about the dividend. That used to be the thing that attracted people to the name. Okay, that's off the table. So what are you really buying? It's a piece of paper. Do you want to buy it while more people are coming in to buy it? Or do you want to buy it when it's unclear what the direction might be of buyers and sellers? So that's why I would look at this technically. And I would just say there are 3,000 publicly traded companies in America. Why do you have to own this one? Because you've heard of it? Because you drive a Chevy Tahoe? Like, what is the reason? On what screen would this pop up as a stock that you need to own right now? No screen. So I don't really understand why people would be focused on it. There's way too much to do right now.
Well, let's talk about another name, Grubhub, set to report results after the bell. Kate Rogers gives us a preview now. Kate.
Hey, Sarah. Analysts are expecting Grubhub to report a 4-cent loss on revenues of $357.3 million. This will be all about order frequency, daily active grubs, as more diners were required to stay home around the country in March and April. Did that wind up paying off for the brand? And have trends picked up in places like New York City, where more restaurants are relying on delivery now more than ever? Another thing to watch, profitability guidance for Q2 and the full year will be in focus. The delivery wars we always talk about have likely only intensified during this time as everyone's staying home and seemingly ordering in even more. Back over to you.
Kate Rogers. Kate, thank you. Mike, what's the setup here on a Grubhub, which we're all ordering more food delivery, though the economics of these companies are always difficult to figure out.
It kind of fits in the lockdown basket to some degree, but it's an interesting test because we're maybe pumping more volume through this network at a time when the business model is still very much unproven. A lot of scrutiny on how much they charge restaurants, and even with those charges, they're not really profitable on a real bottom line basis. So the stock is up nicely in the past couple of months, but it's just not had a good trend the last couple of years.
Yeah, up nicely today. What are you seeing, Mike, in the market internals now that we've got under 3 minutes left until the close?
Still pretty soft, pretty much all day, even when the indexes were higher. Here you see more than 3-to-1 declining versus advancing stocks on the New York Stock Exchange. And so clearly 75% to the negative, a little bit better on the NASDAQ. And then look at the S&P against the equal-weighted version. So the average stock pretty severely underperforming all day. That's been, obviously a pretty familiar story with those very large mega caps kind of carrying things, holding the indexes together. And then the volatility index, it's up in the low 30s. It's still a little bit sticky up there. It really is tracking to some degree high yield bond spread. So the risk perceived in credit is sort of helping to hold up the volatility index up in this level. In fact, some people say VIX is underpriced relative to where bonds are trading right now. So you see it around flat on the day, though.
Mike, and clearly the dollar is also stronger today by about 0.5%. The correlation we've seen there is it's weakened, though, compared to a month or so ago in terms of its impact on risk assets.
Yes, it has. It's not been something that seems playable on a day-to-day, right around that 100 level. Also, as you mentioned earlier, you're seeing yields tick up in the Treasury market today, and it seems as if mostly because Treasury's talking about issuing a lot. So this isn't really a response to macro signals as far as I can tell, at least today, as much as it is this idea that a lot of longer-term government paper is on the way.
Okay, Mike, thanks so much for that. We've got just over 1 minute left of the session. We are Not far from the session lows. The Dow's down more than 200 points. We were down 221 a moment or so ago, but still down the best part of 1%. The S&P's down 0.65%. The Nasdaq's still the outperformer, but it's only up by 0.5% now. The Russell's down 0.8%. Within the S&P, 2 sectors holding on to gains: tech and consumer discretionary. The other 9 sectors are in the red, led lower by utilities, energy, and financials. You're seeing the regionals suffer, down 2.6% today. The investment banks are relatively outperforming, down less than 1% for Goldman Sachs. Interestingly, for the week as a whole as well, Wells Fargo down a lot, down 7% compared to Goldman Sachs, for example, which is essentially flat. As we mentioned earlier, oil, having had a great 4 or 5 sessions and up some 20% for the week, is down today 2%, and a reason partly why energy stocks are suffering today. The dollar, we mentioned, higher yields to the long end, higher today, but at the moment, equities as we close are lower. For the S&P 500, down 0.7%. For the Nasdaq, right near the session lows, down 216 points, or 0.9% for the Dow. The Nasdaq just higher by 0.5%. Sarah.
Disappointing close for the bulls, for sure. Welcome back, everyone. If you are just joining us, I'm Sarah Eisen here with Wilfred Frost, along with Mike Santoli, CNBC senior markets commentator. Take a look at how we finished up the day on Wall Street. We swung around, as you can see, between gains and losses all day, and then we sort of saw the stocks take a spill toward the close. Dow finishing lower 218 points. In the S&P 500, only 2 groups ended higher. That is technology and consumer discretionary. Everyone else got hit. Utilities, financials, and energy, the hardest hit. The market closing down 0.7%. Tech was a standout again today, and so the Nasdaq was the outperformer all day long, as it has been for the year. It closed the day up about 0.5%, which leaves us for 2020 down 1.3% on the Nasdaq, still 10% off its record high. The Russell 2000 index of small caps also lost almost 1% on the day. So breaking that few-day win streak that we were seeing, stocks are still up for the week, except for the Dow. Get ready for another whirlwind of after-hours earnings. We are just moments away from Lyft, PayPal, Square, and Grubhub results. And that's not all. Wynn Resorts, Etsy, Peloton, T-Mobile, they're also set to report just moments from now, and we will break down T-Mobile's results in a First on CNBC interview with the company's new CEO, his first quarter. Joining us to talk about the market today, Ritholtz Wealth Management CEO Josh Brown, still with us. BNY Mellon Director of Market Strategy Liz Young joins the conversation. Though first to you, Mike, on a day where we saw Treasury yields reach their highest point since April, and we saw stocks really close near session lows. What was the momentum about today?
Kind of tired, kind of acting a little bit heavy on the stock side of things. Actually, from 3 o'clock yesterday afternoon, S&P down 2%. So a week ago today is when we hit the high for this rebound rally, and we're down 3.5–4% from there. Obviously, that day a week ago was when we sort of front-loaded a lot of the incremental good news. You had the Gilead trials that came out well, and a lot of news flow about potential reopening of the economy. And it seems as if we kind of feasted on that news, got the index to a certain place that was really up toward some kind of critical levels, kind of some old highs from last year. Anyway, it seems as if there's just not that much impetus to get beyond it, and here we are with about a 3.5–4% decline. No real net damage in a big picture sense, but it shows you that the market is in a little bit of a no man's land, hard to get traction right here.
We've got T-Mobile numbers, Sarah. They're just coming out. Let's get to them. So revenue coming in at $11.1 billion. The forecast was $11.4 billion. EPS, though, beating, coming in at 1.1 versus a forecast of $1.02. So a decent little beat on the bottom line, but not the top line. They had 777,000 branded postpaid net adds. The expectation was 750,000, so it looks like a slight beat there. But they are removing guidance for the full year, not able to give it in this environment, though they say at the end of the next quarter they hope to be able to reissue guidance. They do give a Q2 guide for net adds, which is 0 to 150,000. So quite a big range there, I guess, speaks to the difficulty all sorts of companies have in terms of addressing these types of issues. And of course, so much in this, Mike Santoli, First one post the merger, first one for the new CEO, and the stock. Well, they've just moved the stock, so I didn't see what it's doing. But stock's roughly flat.
It's flat.
Yeah, just about flat. Yeah,
and coming in, performing not too badly coming into this result.
Yeah, most likely going to trade from here on the net ad numbers, as well as obviously the progress in terms of integration, cost synergies, and all the rest post merger. It's not really an area I think anybody has particularly high hopes for, but steadiness is what you're probably after if you want to look at something as the kind of new number 3 in the wireless carrier space.
Let's bring in. Nope, so we're not ready yet. Sorry, Josh Brown. I'll come to you first of all. Then, in terms of what you think of this space, is this pure play connectivity rather than dabbling in trying to develop content strategies and whatever else? Is this a good place to be?
Yeah, I'm not a big fan of the content strategy, so I like the idea of being a wireless carrier, focusing on that, building out technology, getting the marketing right, and then coming up with a way to pay a really good dividend. That's what these businesses should be doing. I don't think they should be creating websites and TV shows. So I'm in Verizon, which has done some content, but I think it's a better bet than T-Mobile. 4.5% yield, 12 times earnings, fairly steady. The only knock on the company is the debt load, over $100 billion in debt. But I think it's very manageable given how low interest rates are, and they can refinance at will at this point. So I wouldn't use it as a reason to avoid it. I would own Verizon right now.
Okay, I just want to bring you into the conversation, Liz, as we await more names reporting earnings. What are you looking out for in terms of themes? Are we able to get any themes on these earnings calls as to the path forward and the view from the C-suite about reopening and how businesses are going to perform?
Well, look, the first theme is that when we look at the companies that are reporting today, it's a lot of technology, it's a lot of communications. These are the companies that expectedly did better throughout the drawdown and should be able to carry us into the future, even if we have adjusted behavior. But I think to Mike's point earlier in the hour, what we need now in order to actually have a rally that's durable is better expectations on growth, better expectations on earnings across the board, and a little bit more of a broad-based rally and broad-based strength. At this point, we're still relying on way too few companies to really drive us forward. And a day like today, when there wasn't a lot of headline news about the macro data, we don't have that fundamental strength to take us to the next leg up.
More earnings hitting the tape. Let's get to Peloton numbers. Diana Olick.
Yeah, well, Peloton came in with higher than expected Q3 revenue and strong Q4 guidance. For Q3, net loss of 20 cents a share, revenue of $525 million. That's 66% annual growth and compares with revenue estimates of $488 million. Now, net loss in Q3 of $55.6 million, primarily driven by non-recurring litigation and settlement expenses in the quarter. It gave strong Q4 guidance on revenue, more than doubling year over year to between $500 and $520 million from estimates of $383 million. Some big growth in connected subscribers, that's on the bike and treadmill, up 94% annually, and digital subscribers on the app up 64% annually. Total subscribers now 2.6 million. They also saw very low churn with increased subscription reactivations during the period, especially in January and during the last few weeks of March. They're not selling or delivering the tread now because that requires technicians to go into the home, but they are delivering the bike to your door. And demand has grown so much in Q4 already. They said they are seeing longer delivery times in getting the bike to customers. Now, Peloton says it continues to pay full salary and benefits to all employees and are making all rent payments across retail and studio locations. And after extending its 90-day free trial period, Peloton now has over 1.1 million people signed up for the free trial and over 8 million workouts completed from March 16th to April 30th. So a lot of growth for this streaming fitness service that is, of course, playing to people who are at home and can't work out in a gym anymore. Back to you guys.
And quite an optimistic outlook there in terms of what they could share going forward. The stock rocketing higher after hours, up 5% or so. Lyft earnings are also out. Let's get to Deirdre Bosa with those numbers. Deirdre.
Sarah, this stock is also rocketing higher, up more than 10% now in extended hours because
This was a much better quarter than the street was expecting. They were expecting some big losses, but revenue and losses actually beating estimates. Revenue at $956 million versus $893 million expected. That's growth of more than 20% year over year. Net loss of just under $400 million versus more than $1 billion in the quarter last year as they were preparing for their IPO. Adjusted EBITDA loss was $85 million, an improvement of about 60% year over year. The street was expecting more than double that number. Cash position. This is important because we know that the ride-sharing companies are in for a world of pain. That actually hasn't changed significantly from the end of 2019. The company has $2.7 billion in cash and cash equivalents as of the end of the first quarter. CEO Logan Green in the release saying that Lyft can weather this crisis, and it is responding with an aggressive cost reduction plan. That, of course, includes the layoffs that we've been talking about last week. Lyft announcing that it was cutting about 17% of its workforce. All in all, guys, I think this shows that Lyft was on track for a pretty good quarter as ride-sharing starts to show profitability. But, here, of course, the global pandemic hit and Lyft is now in crisis mode. That does show up when you dig into the numbers a little bit. Active riders, for instance, that number grew just 3%. People abruptly stopped taking rides closer to the end of the quarter and as lockdowns were put in place. So we will see a lot of pain in the current quarter. And I don't think that you should extrapolate Uber from this because Uber is global and it has seen a slowdown in its markets far sooner than Lyft has. Remember that Lyft just operates in North America. So it will be key to hear what is said on the call and what they're seeing in the last month, guys.
Yeah, I mean, 23% revenue growth seems impressive in this kind of environment for the ride-sharing company. Deirdre, thank you. That stock up almost 15% after hours. Wynn Resorts earnings also out. Let's get to Contessa Brewer with those numbers. Contessa.
Well, what was estimated was a loss per share of 72 cents. What's coming in, adjusted loss per share, $3.54. The estimate on revenue was $1 billion. What's coming in is $954 million, so just a slight miss there on revenue as well. Let's get into this. We know that the Macau casinos were shut down for gaming operations for 2 weeks in February. They had reopened, but there's no tourist visas coming in. They're not seeing a significant ramp in business there. We know that Las Vegas shut down in mid-March, and there's a 19% decrease in Las Vegas for operating revenue. In gaming, they often pay attention to the EBITDA numbers, these property earnings. And what's so important there is that they were estimated to come in maybe $205 million to as much as $470 million. Instead, we're seeing a loss of $5.3 million in property EBITDA. The company has suspended its dividend now. They say that they have cash or cash equivalents on hand of $2.89 billion. We're going to get a lot more color on the call starting in at 4:30 here about how they plan to reopen, what they're expecting for business ramp, guys.
Contessa, thanks so much for that one. That one's down 2.7%. More numbers continue to hit the tape. Grubhub is out. Kate Rogers.
Hey, Wolf, that's right. Well, Grubhub reporting break even on EPS. Analysts were expecting a 4-cent loss. Beat here on revenues, $363 million versus $357.3 million. On COVID, basically saying Grubhub will be using nearly all of our profits in the second quarter to generate as many additional orders for our restaurant partners as possible. Also adding 23.9 million active diners. That is a 24% year-over-year increase from the first quarter of 2019. And finally, just one more comment here on COVID, saying it is a net tailwind for growth metrics for this business. The stock is down over 2% right now, but hearing that it's a net tailwind is not something that we've heard really so far since earnings season began, guys. Back over to you.
Kate, thanks so much for that, down 2%. Let's pivot back to T-Mobile, whose numbers just hit. A slight beat on the bottom line, slight miss on the top line, and pulling full-year guidance, albeit allowed to have a few underlying guides for Q2. Mike Sievert, the T-Mobile CEO, joins us. Welcome, and thanks for joining us.
Thanks a lot. Great to be here.
Congrats on taking over in full and completing the merger. I guess the first question, though, Mike, is in this crazy environment, is what level you've seen in terms of change of usage, given that people, of course, are at home. Does it alter when it's mobile versus fixed? Are you seeing higher or lower on the mobile side?
Well, I'm so proud of our network team. The network's performing incredibly well. Data traffic's up, obviously. But what's really up is minutes of use is up by a third. Picture messaging is almost doubled. Gaming has doubled. Video conferencing, obviously, more than doubled. What's happened, of course, is the network has moved, too. During times of day have changed, and also locations. People are using it much more in the suburbs, obviously less in urban areas. And all through it, our network is performing better than ever before, with less congestion and higher satisfaction rates than ever before. Our Net Promoter Scores just hit an all-time high, even though this pandemic is unfolding and people are relying on that network. We're really proud it's standing up to the need.
What about user growth, Mike? Given that most stores are closed and everything is sort of on hold, can T-Mobile continue to keep up its share gains that it historically has seen and has helped the stock and helped the business?
Absolutely. You know, we're 5 weeks into this merger, and amazingly, we had to pull it off during this global pandemic and this incredible situation. And I'd say that, if anything, these 5 weeks have taught us that there may, if anything, be more synergy potential in this business and more growth potential than we saw before the transaction closed. One of the fuels of that growth and that synergy potential is churn over on the Sprint side. You know, as more and more of those Sprint customers get exposure to the T-Mobile network, and we've turned on nationwide roaming, their satisfaction levels are rising, and we may see an improvement in the Sprint customer base faster than we were expecting. We may also see other improvements faster than we were expecting, including network synergy attainment, retail synergy attainment, procurement attainment. So, 5 weeks have taught us a lot. Obviously, we're dealing with some incredible issues, but there's nothing but momentum behind the potential of this business in the medium and long term. But we got to work through these COVID issues in the short term, and that's for sure.
Mike, you mentioned the network's holding up well despite a big increase in usage. Does coronavirus alter the timeline and need for the rollout of 5G? If things are holding up well, but there's going to be a pinch on people's spending and they may not move to a 5G-enabled phone as quickly as before, does that give you more time to roll it out or not?
Well, it may very well. One of the things that's so great about this combination is that the new T-Mobile is finally able to break down that trade-off that customers have had to make since the beginning of time, which is, do you want a better value or a better network? We're going to be able to deliver customers both. And I got to say, a better value right now is really resonating with people. And I think as social distancing starts to come to an end here over the next few months and people get back at it, I think we're going to be facing economic circumstances that cause people to question whether or not they're getting the best value. And T-Mobile will be there to stand up for them and give them what they're really looking for in the marketplace. And so that gives us a lot of potential strength.
I think it's interesting, Mike, that you talked about finding more synergies when it comes to the merger. But what about delays? I mean, there has to be projects on hold, marketing campaigns, for instance, joining stores together, just a merging of this business and the execution that's going to require as a result of COVID-19, isn't there?
It could go the other way. For example, we see the potential to rationalize our retail fleet, if anything, potentially a little bit quicker. We've had so many of our stores closed down, and that has allowed us to address when we reopen, how we reopen, in a way that maybe is different than it would have been without the crisis. The network deployment is proceeding apace. That hasn't slowed down a bit. And to the premise of your earlier question, there may even be potential there to move faster as we've moved more Sprint traffic onto the T-Mobile network faster than we were expecting to, and that may allow us to move faster to get this combination done than we were expecting. So, we're not here to make any predictions, but 5 weeks in, we're seeing a lot of optimism, and we feel a lot of optimism about the potential to go faster than we were expecting, and potentially to go bigger than we were expecting on both growth and synergy attainment.
Mike, I wonder how you think about your main competitors. Your predecessor used to have a nickname for Verizon and AT&T, which was Dumb and Dumber. Do you have a nickname for them? How do you think about them and how they compare to you?
Well, why on earth would we ever give up that nickname? And by the way, our overall growth this quarter, it's so great, again, to compare to AT&T and Verizon. Our service revenues of $8.7 billion, were up 5.3%, an all-time record high. And that 5% growth was more than twice the growth rate of either of those two other guys. And so it's no wonder they were fighting so hard over the last 2 years to try to keep us from merging with Sprint so that we could create this spectrum portfolio that now, and get this spectrum portfolio in mid-band and low-band is double, just about double what AT&T has, and almost triple what Verizon has for similar-sized customer bases. And so we've got the tools and the raw ingredients to bring a level of competition to those guys they've never seen.
So two specific questions on that from the analysts that they want to know. One, can you close that margin gap with Verizon? And two, can you start to, now that, with this bigger number 3 competitor, start to win over bigger corporate accounts?
Yes and yes. The long-term aspiration that we communicated for this company was margins in the mid-50s, and we still see that. In fact, as I said, we see the potential to move there faster perhaps than we were expecting when we first announced this transaction back in 2018. So margins in the mid-50s would produce an enormous return for the investors in this company as we grow into it and take share from AT&T and Verizon. So I see a ton of potential there.
Those guys clearly are your long-standing rivals, Mike. I wonder whether in a couple of years' time, once 5G has been fully rolled out, whether you'll be just as much competing with fixed-line cable providers. Is that the way you see the industry pivoting? Will we only need one subscription if 5G really is as brilliant as some of you guys suggest?
Well, we see an enormous potential to compete. And by the way, that is the least competitive market on planet Earth. There is so much potential to bring a level of competition to cable, and they're not prepared for it. At least the wireless guys have faced competition for years, and it's a fair fight. But the cable guys don't even know what competition looks like. This 5G network will allow us to market in-home broadband through radio waves in 52% of U.S. zip codes over the next few years. So we're going to move very quickly to try to seize that opportunity and bring lower prices and better connections to millions of customers.
But I think are you in John Legend's T-shirt? Is that the same? You have the same T-shirt in the pink lighting?
Well, it's a unique Mike Sievert version, but thanks for noticing our branding. We love our brand here at T-Mobile.
Always in the hot pink. Thanks for joining us, Mike Sievert. Fresh off of those earnings.
Of course, great to be here.
I think the after hours action, really like to hear the view forward there, the stock moving higher. Etsy earnings also out. Courtney Reagan with those numbers. Courtney.
Hi, Sarah. So looking at their profit, so they reported a GAAP EPS of 10 cents. The street was looking for 19 cents. Revenue, though, stronger than expected at more than $228 million. The street was just looking for that to be about $220 million. The company had given us a previous update with at least some metrics that gross merchandise sales, of course, all of the sales on the platform, up about 32%. They told us that in early April. Active sellers up 26%, active buyers up 16%. The company is suspending its share repurchase program, and they had previously pulled their full-year guidance. They are, though, giving us a look at the second quarter, and the revenue number is interesting. The full number is well above what the street had been looking for revenue, but they go on to explain that they had a relatively strong April and don't necessarily expect that strength to continue throughout the quarter. So kind of a mixed message for that stronger than expected second quarter revenue number. Etsy shares are higher after the bell, but they have pulled back at least from the early peak hit in the after hour session. Back over to you.
Courtney, thanks very much for that one at 1%. Meantime, Square and PayPal are both out, and Kate Rooney has those for us.
Hey guys, Square shares down about 6% right now. The company very much seeing the effects of COVID. An unexpected loss on EPS, a loss of 2 cents. Analysts were expecting a gain of 13 cents. Adjusted EBITDA for the quarter down 85% year over year. That came in at $9 million. That was thanks to increases in reserves for loan losses. Square also pulling Q2 guidance. They had pulled full year guidance earlier in the year. Gross payments volume, that's a big factor for these payments companies, $25.7 billion. That was a miss. They were expecting $27.3 billion on the street. Net income was a loss of $106 million. Also COVID related. They're holding money aside for estimated loan losses. And Cash App, that was a bright spot. They did see gross profit grow 115% year over year. Record new user numbers in March. They did not give an update on total numbers. But now on to PayPal, shares down as well. The company pulling second quarter and full year guidance. That is new. The company had not mentioned that before. Q1 was a miss on EPS. We had 66 cents.